I welcome you all for today's half-a-day workshop on accounting and auditing consideration for crypto, virtual digital assets. To handle this session, we have two eminent speakers, none other than CA Asha and Shubham Bindal from Delhi. Shubham is joining from Delhi. I welcome you both of you for this program. Generally, we know that still some of the members, I cannot say all, not able to understand clearly what is how VDA, what is crypto, everything. But Asha madam has gone one step ahead and she is already teaching about accounting and auditing consideration. As she says, almost 230 startups is there in that virtual digital assets. Maybe it may increase. Hope we'll be having a lot of work for that. Hope for the better. And I welcome Asha madam. She is physically present in institute. I request our Sikasa chairman Kavita to welcome Asha madam with bouquet.
Thank you, sir. Should I stand up? No? That's okay. Okay. Thanks so much.
Thank you so much for
Thank you so
being.
This is a bouquet after 3 years, actually.
I once again welcome Shubham Bindal also, sir, for virtually joining and enlightening our members regarding accounting and audit consideration in crypto. With this, I request our treasurer Manjunath Hallu to give a brief introduction of both the speakers. Over to you.
Thank you, Chairman, sir. Good evening, members present physically and virtually. Respected Chairman of Bangalore branch of SIRC of ICAI, beloved members, and Sikasa Chairperson CA Kavita Parmesh, and all members present here. I, CA Manjunath M. Hallur, have privilege in introducing today's speakers to this August gathering. Firstly, Asha Merugu is a chartered accountant, is a company secretary, is a cost accountant. She is also SEMA at strategic level, and she has done her Bachelor of Business Management, and she has worked in E&Y for a year, and then in KPMG for more than 11 years, almost more than 14 years of experience post qualification, and she has secured All India 40th rank in CA Intermediate Examination, secured first rank to Karnataka in CA Intermediate Examination, and she has been felicitated with late Sundara Raja Endowment Award by ICSI, awarded as Super Team Employee twice at KPMG, has been awarded with kudos over 3 times, topper of college and awarded as Best Talented Student, and nominated for High Potential Women Leadership Program at EY. And Madam is also a state level badminton player from school. With this brief introduction, I present before you CA Asha Merugu, and also I have the privilege to introduce another speaker for the day, CA Shubham Bindal. CA Shubham Bindal is a chartered accountant and a BCom honors graduate from Delhi University. He has been a part of technical accounting team of EY since 2018 and currently working as an experienced manager. He has previously worked with Deloitte India's Assurance Division. With this brief introduction, I present before you CA Shubham Bindal. Over to you, both speakers. Thank you.
Thank you, Srinivas sir, and thank you, Manjunath sir. It's very helpful, and thank you, Kavita ma'am, for a wonderful welcome. We're good to start, sir. Should I just share the presentation and we'll start off?
Yes, madam, we can.
Please.
Awesome. So thank you so much. I think it is for me a very big privilege today to sit in ICI and deliver this. I remember 2.5 years ago, I think every year, I was telling this to Srinivas sir, last probably 15 years, every year I've been at least talking once in institute, and I've got all 15 years mementos with me. ICI for me is very special always. It kind of feels very great to be back to ICI and giving this session physically. And of course, we are small, but this was a case when I used to deliver sessions in the auditorium where we had 300, 350 of them sitting together, and we had only 10, 12 of them virtually. Right now we see the flip. That is what is happening to the virtual world. It's increased so much. There is so much of traction that everybody is virtual and we are very few people physically. And that's what exactly we're going to talk about today. We're talking about how the virtual space is increased and what are the opportunities around virtual digital assets, right? So everything is becoming virtual. People are virtual. We are also virtual, right? So we're seeing less traction of physical movement of assets, right? Physical interactions, physical delivery, everything is getting reduced once virtual is taken over the presence. And same with the accounting consideration for virtual digital assets. So that's what I think we'll focus today. I would just want to quickly cross-confirm with everyone that is the presentation is visible, whatever I'm sharing. I know in this room it is, but to everyone, is it visible? So if you can just once confirm, Srinivas.
Visible, madam, visible.
Perfect. I think we have around, I guess, 35 of us here. I would keep it very interactive because it's a workshop. Don't want to kind of make it a one-sided lecture and just try to kind of just deliver. So we'll have it more interactive. What I'm not sure is that can participants speak, unmute and speak, or it will just be the Q&A that comes in WebEx?
It will be mostly Q&A. They'll not be able to
Q&A, madam.
They'll not be able to speak. No worries. So I think perfect. So then we'll tag the Q&A also. If you have any questions, do just put it in the Q&A. We will try answer all of those. We keep it more conceptual and I think at a ground level, and also focus on the opportunities that with chartered accountants, all of us have in this space, right? It's I would say it is just a tip of the iceberg. We've just scratched the surface. We haven't even gone to the depth of it. None of us actually have gone to the depth of it. Maybe we've just done 100 hours of more study just to present this. But if you truly ask me, are we capable to present this? The answer is not necessarily, because we still need to do a lot of reading. There are a lot of ambiguities, not a much clarity being given by any of the institutes around this topic. It's evolving so fast that by the time they come up with the clarity for one asset, the asset would have vanished, right? And there's another asset that's come in the picture, but we still have to catch up with the speed in which the profession is going. So we'll try keep it more conceptual. This is what we're going to cover in the workshop today. I know I'm conscious it is 5:15 now. 1 hour, 15 minutes, I would talk about accounting concepts, largely touching on the ground concepts, probably what kind of opportunities we have, what could be the holder of the cryptocurrency be looking from an accounting side, and what should be the issuer of the cryptocurrency should be looking from an accounting side. So those are the two parties that I will touch upon. But in the ecosystem, there are many parties, but I'm only talking about two ends, right? Issuer and the holder. As we keep moving on, and Srinivas sir, I think if this topic interests the members more, we can also bring the miners, the exchanges, brokers, right? I think depositors, custodians, all the others in the ecosystem at some point of time. To make it simple, I've only covered two people here. Issuer and the ultimate holder is what we will cover. And all the accounting guidance that you would see is revolving around both of them. So this is largely, I think, what we will look at it, but I'll just pause it here, and probably, two of you are here, but anything else you wanted to know from this session, any expectation you carried while you came here?
So mostly you got it.
Sure.
Issuer, at present we are looking at the issuer
And the holder, how to account for it. Anything else from you?
any standard has been issued by
Any standard has been issued, we wanted to know. So we will cover around the regulatory landscape also, whether is there any regulations at this point of time. Just to get that clarity, there is no standard. And I think I will start with that to say that crypto is a sector. Right? Crypto is not an asset per se. It's a sector. Because it's a sector, all standards are applicable for a sector. Like say all of a sudden we get a new banking models. It is a sector. For a bank, all the accounting standards are applicable. Similarly, for a crypto company, all the accounting standards are applicable. So therefore, what institute is thinking around is that they may issue the guidance note, or they may issue some specific guidance around how to apply the standards, but they will never issue a standard, because it is not going to be it's not going to be a property, plant and equipment, or not going to be an intangible, not an inventory, not just a cash. It could fall under any of the standards. So the thinking is all Ind ASs are applicable, which is what I'll cover today. In each Ind AS, how the crypto sector will have an implication. But is there a particular standard for crypto? The answer is no. It's a sector. It will have application from all the standards. Right? That is how I think we look at it. I think if this makes sense, I will have a watch on the time. talk around next 1 hour 15 minutes on the accounting, and then we'll cover 1 hour 15 minutes on the auditing considerations, which is where most of us would be interested. We have some startups in the fintech and crypto. We talking to them in their language, just communicating to them that we are aware about what is changing and giving them the perspective that we can audit your company. I know I have to be conscious using this, but the big audit firms, or for that matter, even the medium-sized audit firms, may not be willing to audit this today because it is very highly risky, and they're very conscious of not touching fintech, crypto, and digital sector. It is so risky that anything can be volatile. It is at boom some point of time, it will just drastically reduce. So there are big opportunities for proprietors and individuals and the firms which are ready to take a amount of a risk, covering their own management representation letters, right? Covering their own risk parameters. I think if we are willing to take that, it is a very good opportunity. But the firms which are established today are not willing to take the risk. They don't want to be coming in the newspaper. They're kind of very conscious about not touching this sector. The way I look at it is it's a big opportunity as long as we are conscious about what we are auditing and put all those caveats in the representation letter. I think we should be covered, which is where we thought audit considerations would be relevant. We'll cover 1.5 hours on how do you structure the audit, basically. Not about what you audit, but what is the risk element? How do you get the independence confirmations done, right? Those are the areas we are covering largely from structuring the audit perspective. It is so deep that what we are covering today could just be 5% of the whole topics, but we'll try to do justice to this. So I think touching upon accounting part, we are only talking about cryptocurrency in the discussion today, right? Only crypto. The sectors, if I kind of put financial services as a broader sector, there are banks, there are insurance companies, there are investment banks and wealth asset management and assets under management, all of those companies. And there is also fintechs and crypto, which is an evolving market. 2008 onwards, it's evolving. But with the presence of, I think, all this COVID, with all the, I think the restrictions around finance not being easily made available by banks, fintech sector has boomed a lot because they give a very fast finance. We can't imagine, I think we could not imagine maybe going 5 years back, getting 10 lakh rupees loan in 5 minutes. Right? It was impossible. Today at the button, I just have to press the button. I'm interested in the loan and they will just give you 10 lakhs. On what guarantee? We have no clue, but we get so easy finance, right? We get bridge loans, we get student loans, we get peer-to-peer loans. I don't have a amount to pay rent. We get a loans to just pay the rent for 5 days and you can repay them in 5 days. I think those kind of short-term finance, peer-to-peer finance, the bridge finance, neo-banking, I think those are all the emerging themes in the financial services sector. And I personally feel that there are multiple opportunities for CAs in the sector. So we haven't really evolved there, right? We are not thinking about those opportunities. So we still look at manufacturing companies, we look at GST, we look at, I think, maybe compliances, tax is a huge opportunity. What we haven't cracked is there are those financial services, small companies, which today might need a lot of services, but most of us are not even tapping them. Right. So that is like a fourth sector. And what we're talking in the fintech is only crypto today. A fintech could be of very different varieties. It could be RegTech, it could be InsurTech, right? It could be a lot of things. And it is so big, we are only restricting our conversation to companies which deal with cryptocurrencies. Now, what is cryptocurrency? I think I'm just trying to see in case if anyone want to respond and chat with me, it will be very good to have interactive session. I'm happy that I have 3 faces to see here. Unlike in home, yeah, you can sit there. That's also great. When I used to do these sessions from home, I used to see the wall, see myself. Some point I kept a mirror on the other side so that I can also see myself in the mirror. But it's a happy feeling to smile and talk with people around. So what is cryptocurrency is I'm not sure if you're aware about what is cryptocurrency, but any clues, any names that you would want to take up? What comes to your mind when it's crypto? You can also chat with me in the chat box. Blockchain-based currency using hashtag Ritesh says that absolutely. Anything that comes to your mind with the recent news? Terra is the terror, right? It's just half the terror is in Terra. 40 billion wipeout of investments. People are crying, right? There's a big, that is immediately in your mind. Bitcoin, right? There are many, but Bitcoin is the gold of, I think, crypto word they say, right? It is Bitcoin and Ethereum is the secondary one, but Bitcoin is always the gold, they say. And that is at today 30,000 rupees. We wish so it is $30,000. One Bitcoin is $30,000. It was last month when I presented in Institute on the same topic. I think it was just 2 months ago, I think I presented. It was around 43,000, 44,000. Matter of 2 months, it has now become $30,000. That's a volatility. So what is cryptocurrency? I think to Ritesh's point and your point, it is of course a currency which is recorded on a distributed ledger. It uses cryptography for security, where I think you mine, as you rightly said, use complex algorithms and hashtag and develop the blocks, right? And develop a distributed ledger system. And each block, as you keep developing, gives you a value towards it. And we don't want to really get into what exactly is crypto and how it is mined and etc. That is a software, probably a set of miners' job. What is important for us is that what are the different types of assets available today? There are more than 11,000 coins available. Right? More than 11,000. Started with Bitcoin in 2009. Bitcoin is the first coin released in the year 2009. And we are saying 2022, there are more than 11,000 coins in the market. It is, I think, I'm wrong to say it is a share market because it is not, right? It is probably a tiger market. It is really, no one is understanding where the market is going. There is no base for it, but we'll have to figure out. With 11,000 coins, Terra was one of the coin people just invested thinking it is a stable coin, right? It actually does not fluctuate, but it was pegged or it was collateralized to a currency that was not stable, right? And it just flipped. Everything, I think, washed off. But said that, what I think would be important for us is, would this crypto be vanished? I don't think so. It'll ever be vanished, because in 2009 to 2022, if we are able to survive this, there's so many big players in the market that they will never get crypto to die. Right? If there are 11,000 coins, there's such a strong ecosystem today, from holder to the issuer, in between so many parties. There is never a possibility that we will issue a regulation to say that all the parties have to shut down their doors and go home and do a new business, right? So for me, clearly, there is a visible opportunity. The opportunity is all the scams will open up to a huge regulatory intervention, right? SEBI will interfere. Of course, the ICI will interfere from an accounting angle, MCA will interfere, and there'll be strong regulations around this entire ecosystem. And that is where we have opportunities, interpreting these regulations, disclosures, right? MCA came up with the notification that every company in the Caro report that when we are publishing, every company has to disclose if they hold the cryptocurrency, what is the volume of the currency that they hold, and what is the type of the currency, and what is the gain or loss that they would have incurred from their cost price to the market price on that day of the reporting. So I think there are already disclosures mentioned by MCA. It's mandated in Caro. I think we would see a lot more opportunities and the regulatory landscape being enhanced as we move on. So this is about cryptocurrency. As of now, no judicial authority issues this, but we have to wait and watch. Let's say from an India point of view, if RBI comes up and issues their own currency, their own coin. Some coin they said Lakshmi coin, but now they're saying it's going to be central currency, CBDC is what they're going to issue. If that happens, we'll have to see it may get a jurisdictional authority. Right? As of now, crypto doesn't have any jurisdictional authority, not backed up by any law, no legal coverage is there. From an India perspective, it is unregulated. Said that, maybe a couple of years ago, RBI said it is banned. It is totally banned. They said we will not allow crypto. Then gradually they said we'll issue regulation to monitor it, which means there is a phased improvement in their thinking. They're saying from banned to we will look into the matter and issue the regulation is a big mindset change. And in those lines, in February, when the budget was issued, they also had a section on virtual digital assets. Like they said, it will be taxed at 30%. Whether it is regulated or not, legal or not, we are not commenting, but we will definitely tax 30%. Tax is tax, right? Anything which is going to create money, they will just tax it. So, but that is opening up a lot more talks around crypto in India. That's, I think, an opening statement in India. The minute it came in the budget, everybody wanted to know about crypto. And the virtual digital asset investment also is increased largely. BuzzRx is doing very well. CoinDCX is doing very well. There are multiple startups which are opening up their own exchanges overnight. And a lot of frauds are also happening. just knowing what is right, which exchange is right, what is the right currency. It needs a lot more diligence from the person to invest. Before they invest, they need to do those due diligences. So I think this is about a cryptocurrency largely. I mean, this is exactly, I think this is a slide that which I wanted to cover to all of you and tell you what are the opportunities that may come in India. We didn't get anything from 2022. This was the latest that we could get is 2021. There are more than 230 startups in 2021. I'm sure 100 more would have added by 2022. Right. So which we are researching around, which are those 230. And I'm proud to say that most of it is in Bangalore. Right? Most of it is in Bangalore because Bangalore is considered to be a fintech hub across the globe, right? We carry a huge presence of fintech clients. Coinbase, right, is situated in Bangalore. Of course, they have a research center in Hyderabad, but they have a financial reporting hub in Bangalore. Any of the new crypto and fintech research centers are based out of Bangalore. I think which is another thing that we should be very proud of and chasing the opportunities from Bangalore, right? And I think we need to create an awareness amongst all of our members that whenever you come across any of the crypto startup, why don't we just talk about what is their business model? How can we support? How can we support in end-to-end financial reporting, right? Their controls, processes, whatever is needed, there would be opportunities for those startups. There are more than 50,000 people who are employed today in crypto sector. This is 2021. I am very confident this number would have gone probably double now. Okay. In 2021, when we hear Nishal Shetty, who is a WazirX founder, he only had X number of accounts. When we heard him recently, he said he has doubled, rather his accounts have become 10x, 10 times more. And he says that only around maybe less than 5% of Indians have accounts today. And there's a 95% of the population which he can still target, right? So there's a huge opportunity. There's also a huge threat. I will use this word very consciously. People will not trade it considering what's happening now, right? With all the people losing money. Of course, there's a threat. But keeping aside concept of whether we need to invest or not to invest, let's keep aside all of it. That do we have opportunities with startup? Answer is clearly yes. We have opportunities. Crypto tech investments are 6.6 billion is pumped into India in the crypto sector by the startups. Venture capitalists are considering this to be one of the booming sector, and I think it is increased, enhanced quite a lot. A lot of funding is going in the crypto sector from an India perspective. So many opportunities around valuation. There are many projects and proof of concepts which are submitted. More than 150 crypto projects are going on. That could be a project on initial coin offer, coining out a new product altogether, or it could be project on coming up a new NFT, non-fungible tokens, or it could be project on how do we make this research to help people in which currency that I should invest in, right? There are a lot of projects going on. There are also projects on, let's say I have a Coinbase as an exchange or a WazirX as an exchange. By the time a coin is released to the market and it gets listed in an exchange, it takes time. It takes, let's say, even 1 month time. There are in between middle exchanges which are getting opened. Now, what this middle exchange does is they say, I don't have a trading exchange, but I'll give you a coin at a much lesser price before it gets traded in the exchange. Let's say as a miner, I have something at $10. It is going to be listed in the exchange at $200. In between, somebody is popping up and say, can you just buy it from me for $100? Right? Because once the exchange is open, you will now be able to sell it at $200. So which means I'm giving you early bird offer that don't go to the exchange. I will be an early exchange for you, but I'm not giving you trading option. It's not buying and selling. Just take it from me, then you can route it through exchange. There are many concepts which are emerging around bridging the gap between the coin mining versus when it is getting listed for trading. Right? So that's also happening. Crypto industry market size is really enhanced. 16 to 2021, it is enhanced. Today, let's take any of the magazines we read. This month, Forbes has got an article on crypto. This month, Times Magazine has got an article on crypto. Economist has got an article on crypto. Any of the major magazines that we are covering is covering about crypto. So there is definitely a lot of awareness that's getting created. I think more so the reason that the market size is also increasing, right? So it's very clear. So these are the different trends in India. I'm hoping so far I'm okay, not boring. No? Okay. All right. So people on the chat, maybe you can just chat with me, just give a thumb impression, smiley, whatever, so that we know that you're all hearing things are going okay. Are we okay so far? Okay, Nupur is okay, perfect. All right, Nupur is from our office.
Yeah.
Awesome. Okay. So we have 4 types of digital assets largely. We have cryptocurrency, which is a medium of exchange like Bitcoin, Terra. All of this is a currency, which is in the form of currency. Now, most interesting thing I always get fascinated is I look at that coin. I look at 5 rupee coin. It looks like a currency to me, but there is no form for this currency, right? We just use that Bitcoin B as a symbol to represent, but it doesn't exist. It is virtual, intangible. Somebody had to imagine Lord Krishna, so they drew Lord Krishna in a particular way, and we imagined that. I think somebody imagined Bitcoin, they just drew B, and it just stuck to our mind. Whenever we say Bitcoin, we remember that B as a as a symbol, but it doesn't exist. We have stable coins, which are more pegged to stable currencies. Which means if I have 1 USD Terra, ideally I would have had $1 with me. Right? If the dollar fluctuates, my USD Terra should fluctuate. I think that's how the concept of it's pegged. It's kind of collateralized to a currency which is more stable. We thought so, but with this Terra being opened up with all surprises, calling the stable as a stable currency is become an unstable argument. Now one can argue with me of putting stable, but should I call it as unstable? We don't know. But there used to be a lot of focus by people on stable coins. People who wanted to just explore, right? They used to say that, okay, I don't want to buy volatile currency. I will open up one Coinbase account or WazirX account or CoinDCX account. What should I invest to be on the safer side? Like the way we tell people you invest in Infosys on the safer side, right? There are certain those safe stocks that we had. Similarly, we had those safe currencies, which were all of those which are listed as stable coins. But unfortunately, the stable coins have their own story to unwrap.
No agreement as such.
Yeah, there's no, absolutely. But this is one type of a digital asset. Then we have many digital securities which we are not covering today, like security tokens, equity stocks, ETFs, debentures, etc. Awesome. So we have non-fungible tokens. NFTs are very interesting concept. I don't know if you've heard about it. So currency, we have those 11,000 currencies. NFT could be a variety of types, right? Today, you can buy a virtual land. I'll give you an example. I stay in Prestige Westwood property. It's a 7 acres property. Of course, I've got one flat. The undivided share of that land would be maybe 200 square feet. Such a pathetic feeling that you get in Bangalore, right? You stay in the 7 acres property and you own 200 square feet. That also you don't own because it is undivided, right? So I think that feeling was always there. So we could never buy independent house in Bangalore. So far not, unless I think I invest in cryptocurrency, and if it booms, it was excellent, but we didn't try for all of it. And I bought the whole Prestige Westwood 7 acres property virtually for 5,000 rupees. Right now, what do I do with it? I'm not sure. There was a Next Earth .io which was available that is selling the properties in Bangalore virtually. So you can just go block whatever you want. You want to buy entire UB City, you can buy entire UB City, but it's virtual, right? Now, what do I do out of that virtual land? We have some case studies. People are running events in those lands. For example, we recently saw Samsung launching its new phone in Metaverse. They launched it in a metaverse. Some of them are launching few products in a Lala land. They have their own land and they're launching in their land, right? Which is all virtual. We see some of the music concerts happening in, yeah, marriages are happening. You're right. So people are absolutely, some of the marriages are happening virtually. I'm hoping that it is marriage of 2 humans virtually, but not 2 avatars. That is also possible. Like 2 avatars are getting married, you don't know what are those avatars, right? So you never know how things will move, but everything is virtual today. Taj Mahal is available virtually, right? You could just own it. What you do out of it, no one knows, but there's a craze about owning NFTs. The crypto punks which are available for crazy amount. It is unbelievable dollars that people are paying to own those crypto punks. So what are NFTs is very simple. Let's say I like this bouquet today because I got it after 3 years. First time, right? Never came to Institute. Now I want this to be an NFT. I click a beautiful picture of it. I mint it over, let's say, OpenSea or one of those network, and I will just create the picture. And this is a picture, I own it along with me with this bouquet. Now who buys it, I don't know, but this is my NFT. This is a non-fungible token. This picture is owned by me. It is my copyright. I will put it in the OpenSea. I can create copies of it and sell if somebody likes it, right? Or I can just sell it as it is, right to somebody. Those are called non-fungible tokens. A very interesting things are happening on non-fungible tokens. I don't know if you have heard, there was one boy who had a big craze of taking selfies, I believe. So he used to take everyday selfies. And I think he once uploaded all the 365 selfies that he took over the year as NFTs. And something clicked. People started buying his selfies because he looks very odd. I think, I don't know, I have not seen that, but that was a big story of that boy. You know about it?
He sold but 3 years something. That time it's around like 7 lakhs.
7 lakhs about one selfie. I was like, yeah, absolutely. Dave, you and me should take selfie today in ICI. Post it. But crazy things, unbelievable things. Why they bought his selfie, nobody knows, right? Why they buy Decentraland, no one knows. But there's a craze about buying things virtually. So I think this is all about different types of digital assets. These are the different participants that I spoke about when I started the session. When I say cryptocurrency, I'm sure we can quickly talk about who are the participants, right? If I hold a cryptocurrency, what am I? I'm the buyer in my slide, right? I will be the one who is buying, so I'm the holder of the cryptocurrency. Let's say they sold the cryptocurrency to me. So what is they? Not sure.
Not sure.
Not sure. It could be an exchange. It could be a depositor. He could be a custodian. He could be an issuer, right? He could be mediator, minor as well. But I think when we talk about seller, we're talking about the one who sold it to us, right? So he may or may not be the issuer of a currency. An issuer need not always be a seller. Issuer is the one who will come with first coin. I will first introduce the coin, right? So I'll do this Bisleri water bottle first. That's what I introduce to the market. They will go to different hands and they sell it to different people. So need not always an issuers are sellers. A seller could be anybody who has an asset or who's created an asset and is ready to sell it. So I think this is the only first bucket I think I'm talking today. We're not talking about probably first and the third one we're talking today. We're not talking about exchanges, miners, maybe not too much about reporting entities. As it's a very complicated ecosystem, right? I'll restrict my conversation to a buyer and seller and probably a little bit about what does issuer does from a crypto accounting point of view. But there are many other parties actually. Just like I think stock exchanges, there are multiple parties to get a stock listed in the market, could be merchant bankers, issuers, bankers. I think a lot of parties who are involved in the system, but we look at only two parties, who issued it and who bought it. But this accounting treatment in between is very complicated, which is I think what I'm not touching today, but we'll touch at some point of time as we get time so far. Are we going good so far? Okay. If you're going good so far, we are touching upon the technical aspects of cryptocurrency accounting. Okay, let's say for all purposes, we'll only take example of Bitcoin today. We'll not take Terror. Yeah. All right, so because it has already created a Terror, so we'll not take it. And we have an orange alert in Bangalore today, right? We'll have to see whether we'll reach home or not today. So we have another Terror. We'll use only Bitcoin as an example for all purposes. Okay, so let's now think about it. Maybe I'll take your name if you're okay. Murali. Let's say Murali owns 5 Bitcoins. Murali will not be in this room. Right, so
I told, but now after this crash, right, everyone has to be
back to the room. So no, but imagine a person who bought a Bitcoin at $100 in 2009. Right, there was a guy who gave how many? Around 10 Bitcoins or so to buy pizza.
10,000
Bitcoins. 10,000 Bitcoins to buy pizza. Can you? That's the first transaction. Can you imagine? He would have died out of heart attack, I'm sure, right? So, but nevertheless, I think assuming Murali owns 5 Bitcoins, right? Now, the question that we're answering here from Murali's standpoint is, what should he do with this Bitcoin? Let's take an example. It is $30,000 into 5. We're talking about $150,000 in his hand, right? The question is, what should he account this Bitcoin as? Right? That's what we're trying to address. You think you have any thoughts, Murali? What should it be? Is that?
It should be definitely it's not a cash. I believe it should be some kind of financial asset.
It should be some kind of financial asset. That's a question we're going to answer. What do you think?
Financial instrument.
It's a financial instrument. Okay, sir, what do you think? No idea. That is how we were also. We had no idea. We'll figure out. Now, let's say if Murali has $150,000 of Bitcoin in his hand, the evaluation that we need to do is how do we account for it? We need to debit something, we need to credit something. Naturally, what is a credit is known to all of us. It is to bank because he's paid $150,000. Cash is gone out of his pocket. The question we're trying to address is what is the debit? What should be the debit is a question we're trying to address. Now, I may want to debit called Bitcoin $150,000. But what we're trying to address is what is that Bitcoin? Right? Where do I classify that? Should it be cash? Should it be bank? Should it be cash equivalent? Should it be a tangible asset? Should it be intangible asset? Should it be inventory? Should it be financial instrument, a financial asset? That is, I think, an accounting analysis that we're trying to get to. So we'll look at one by one. To your point, is the Bitcoin cash? No, it's not a cash because it's not backed by the government. It's not used as a medium of trade. We don't use it as an exchange of a trade today, right? So like I say, this is 10 rupees, this is 50 rupees. I may say this is $10, 10 Bitcoins, but that's also measured in money today. The 10 Bitcoins I convert in money, right? Because that's the medium of exchange for all of us. As the coins are not medium of exchange, it fails the definition of cash, right? So it's not a cash. So therefore, is it a cash equivalent? We'll now go to again Ind AS 7. What Ind AS 7 says is cash equivalent is something which you can convert into cash with extremely less risk, right? You have absolutely no risk while you want to convert in cash, like fixed deposits are easily convertible in cash, right? Just you can convert anytime you want. Is it with a high amount of liquidity? Is it so? Bitcoin is high amount of volatility. Liquidity is very less. It's highly volatile. I bought it at $40,000, putting all my stake into it, and today it's become $30,000. It is so risky that I could never call it as cash equivalent. So it fails the definition of cash equivalent. So therefore, debit cannot be cash. Debit cannot be cash equivalent. Should it be a financial asset? To your point, both of your point, right? Is it a financial instrument? Now that is very interesting definition. Now under Ind AS 109, there is a definition for financial instrument. It says, A, it includes cash. We discussed Bitcoin is not a cash. Second, it says it includes equity instrument of another entity. Now, Bitcoin is not a equity instrument. It's not a share of any other entity. So therefore, ruled out here. Third, it says you have a contractual right to receive cash. To call something as a financial asset, there has to be a contract, right, where you receive cash. What could be the example? Contractual right to receive cash. Debentures. When it matures, or when I kind of submit it back, I'll get cash. Debtors. Simple example. Trade receivables. I have a sale contract. I have a right to receive cash after, whatever is a credit period gets expired. I have a right to receive cash. In Bitcoin, I don't have that. One, there's no contract. There could be smart contract, but it is not enforceable by law today, right? Second, I don't have a right to receive a determinable amount of cash because it could be wiped out like Terra, right? Anything can happen. Surprisingly, though all of us thought it's a financial asset, it fails the definition of financial asset. So it is not a financial asset. I think which is what takes us to basics again. The basics of accounting says anything we look at fancy, we always apply a fancy standard because crypto is looking fancy. Immediate mindset is it is a financial instrument, but it is going back to the basics. They're saying it's not a financial instrument. We'll apply the standards which are already available today. Whatever the standards applicable today is what you apply. So therefore, we go to a test of next standard. Is it a PPE? I can see it on my phone. I can see a logo of Bitcoin, how much I own. But can I see Bitcoin? I can't, right? Therefore, is it a property, plant and equipment? No. I go to a simple example of even the goods definition under Sale of Goods Act, right? Goods means every kind of movable property, right? Excluding actionable claims and money, including shares, it says, because shares somehow were tangible to move, right? But Bitcoin is never tangible. I don't have any certificate to make it tangible. Therefore, it fails the definition of property, plant and equipment, right? Now, this is the interesting thing. Therefore, it's neither a cash nor a cash equivalent nor a financial asset, nor a PPE. What I'm left out is, it is intangible. And it meets the definition of intangible asset. It has identity because we identify it to be one coin, two coins, right? It is identifiable. It is non-monetary, may or may not be, right? This is, I think, an inclusive definition. It lacks physical substance, absolutely. There's no physical substance. Hence, most of the crypto holders classify their crypto investment as intangible assets. So for now, I go back to Murali's portfolio. He has 5 Bitcoins. The accounting entry that he's going to pass is intangible assets account debit, within bracket Bitcoin, to cash. Now, which means, I think I don't have to now talk more about it. Everything that I'm going to account will fall under the guidance of intangible assets. So to your question of which standard is applicable, what should I do? Now I'm very clear. I'll apply everything in Ind AS 38. So I'll go by one. I recognized its initial recognition is intangible asset, right? How do I measure it? Initially, I measure it at cost, right? Less amortization. Now the question comes in. Okay, I have a cost. How much? $150,000 in my example. I should do less amortization, less impairment. The question comes, okay, we have to do amortization. How? To do amortization, I need the
Useful life.
useful life of the asset. I need to know how much is the life of the Bitcoin. Is there a life? No, it is indefinite. It is not a definite asset. It is an indefinite asset. It has got a life which we cannot imagine. We don't know. Therefore, amortization is not applicable for crypto assets. Right? I cannot amortize. So I'll apply Ind AS 38, but I'll have to tweak it in to suit me. Now, to suit when I tweak it, it says it is an asset, intangible, but I don't have to amortize because there is no life. And it falls under the definition of indefinite intangible asset. Now I'll go to the next one. I say cost, less amortization not applicable, then I'll do less impairment. Right? Now, can it be impaired? 100%. 100%, because impairment says your cost, if it is greater than a recoverable value, which means you're under a position of an impairment. When I bought a Bitcoin 2 months ago, I bought it at $40,000. Today it is standing at $30,000. But obvious that my cost is greater than the recoverable value in the market. I'm subject to impairment. Now, the biggest challenge in mind, if you understand, is that whether this event of an impairment is temporary or subsisting. Right? It's other than temporary is the biggest question in my mind. You're saying today it's $30,000. What happens tomorrow? It becomes $35,000. Let's say I create $5,000 of impairment loss. Under the standards, I cannot reverse it. Any impairment loss created on an intangible asset under the Ind AS, from an Indian context, they said you can never reverse it. So the accounting challenge for most accountants today is this, right? Okay, I know I'll have to test it for impairment. I have to do annual testing. Every year I'll test impairment, or every reporting period I'll test impairment. But whether that event of an impairment is actual or it is just created, right? Whether it is absolute or relative, that's a big challenge. And what is most important is if I once create an impairment loss, which is wrong English, if I create an impairment, which itself is a loss, right? I can't say impairment loss. It will be loss and loss, both are loss. So once I create an impairment, ideally, I cannot reverse it. So that's another challenge. Is there an answer? There is no answer. If ICI comes up with their own theory paper, a staff paper, they would address maybe a guidance around how to deal with it. What should be looking around it, right? What should be the guidance around this? I think which is what ICI might come up at some point of time. But as of now, it lacks, it is more judgmental, I would say, subjective. Are we good so far? I know it is actually evening. It's raining outside. Bangalore is beautiful. I feel like eating some nice hot bhajis, right? It's beautiful, but when it is virtual, it gets very sleepy sometimes. And unfortunately, you can't even unmute and speak. Can you, people who are on virtual space, is this going okay? Can we get some symbols? Ritesh says yes, so far. Okay, Ritesh is awake. All right, Srinivas says yes. All right, okay. Some of you are saying yes. If there are any questions, please keep typing in the chat box. We'll take those questions. But I still like, I think if we are in Bangalore, we should start coming to institute, do those in person. sessions, it is always effective. Said and done, story told by Alexa versus story told by my grandmother is always a story by grandmother. I can never forget it. So that's always there. If let's say it's not an intangible asset, it is an intangible asset, but I'm tweaking a question. Now Murli says it's not something that I want to keep it for a long time. So Murli says I want to sell it. I bought 5 assets, 5 bitcoins, because I want to sell it in the market when the market is doing better. Now immediately the point of me holding an asset, the definition of an asset is it has an endurable benefit. It is going to give me economic benefit for the future. That fades because I don't want to hold an asset for the future. Then naturally I shift my focus to inventory. It is not an asset to me, but it becomes an inventory. Then debit in the books of Murali would be inventory account debit to cash. Would that be fine? Then naturally, how do I recognize inventory? I will not have to deep dive. If I have to deep dive, we'll have to then learn Ind AS 2. Inventory has to be recognized at cost or net realizable value, whichever is less. And we were talking if it is a commodity trader or broker, there's an exception that you can't recognize NRV, not at net realizable value. Then what you'll have to do is you'll have to recognize at fair value, right? Fair value less cost to sell is, I think, what you'll have to recognize if you're a commodity broker. But otherwise, the guidance of inventory is applicable for a Bitcoin in my example. I think so far, if this is making sense to you, I think we're very clear. The Bitcoin which Murali was holding in our example will fall under one of these two categories. If intention is to hold it for a long term, not to sell it, not to trade it, but just have it as a long-term investment, then it is an intangible asset. Cost less amortization not applicable, less impairment applicable. I think the measure, that's how you measure it subsequently. If the intention is to speculate, make money, trade in the market, then it is an inventory. I debit inventory, I credit cash, recognize inventory, the way Ind AS 2 talks about. If this much is clear to us, the biggest challenge is how do I value that inventory? Right? Because I know if it is an inventory, I should do a valuation of inventory. And valuation of inventory could be either FIFO or weighted average or specific identification method. Now the question is, all these Bitcoins are fractions. I said 5, but I can also buy 0.25, right? I can also buy 0.0005 today. I can buy tomorrow 0.00010, right? Now the question when it comes is cost or NRV, whichever is less, which fraction when I bought is going to be a challenge. And let's say you sold it. Intention is not to sell, but you sold, let's say 0.5 Bitcoin. From which lot you sold it? There's no lot. Yeah, there's no one-to-one identification of a coin that you're buying. You know, you have 5 coins, this is a worth, but how do you sell it? That's a practical challenge where we as professionals have an opportunity, right? We do FIFO, but we have to create a system, ERP, or maybe a suitable crypto ERP that helps them to measure inventory on a FIFO basis. Where every time you buy it, it makes unit-wise purchases that you made. Every time you sell it, it picks up the first unit that you bought as a sale.
I think CoinDCX, they are able to
issue, but they also do it on a FIFO basis. But there are challenges on a FIFO basis also, because sometimes you get bonus coins, right? Sometimes the miners will just distribute the coins to you. It comes at zero cost.
kind of airdrops.
Airdrops are very common. When airdrop happens, it is at a zero cost, right? But there's always a value. Now I say cost or NRV, whichever is less, it will always be at zero, which is not right.
Yeah.
So those are, I think, the practical challenges that we would face valuing the inventory. But I think we can keep deep diving into it. The point that I want to end in the first accounting issue is that it will either be an intangible or it will be a inventory, and I'll either apply Ind AS 38 or I'll apply Ind AS 2 as the case may be. Okay, and there are practical challenges around it. We spoke about it. How do we impair is just like how Ind AS 38 has an impairment principles all about. I think this is largely, let's just talk about, it was an intangible asset. Murali, when he bought 5 coins, intention was to keep it for long term, right? Now he doesn't want it to trade, so it's not an inventory. But with all that is going in the market, what he decided is he decided to sell all of it. Immediately, the asset from intangible will move to a held for sale category. Because I'm now not going to keep it for a longer term, I'm going to sell it. It's not an inventory because I'm not trading it. My intention is not to buy or sell. My intention is to just sell now. I just want to get rid of what I have. Then it becomes a held for sale asset. Then what I need to do is move from Ind AS 38 to Ind AS 105 accounting. And held for sale says it is at cost or fair value, whichever is less. You recognize an asset at cost or fair value, whichever is less. In Murli's example, $150,000 is cost. Let's say the fair value has become now 100,000 with the change in the market. Then you will recognize this at 100,000, do 50,000 as a loss. Unrealized though, because you haven't sold it, but you will still move an unrealized loss to P&L. And 100,000 loss, you will actually move it to P&L when you, 100,000 you will make it when you sell it. Right? That is, I think, an accounting. Then I'm moving from 38 to 105. Answering the same question that you have, that if which standard should I apply, depends on which scenario I fall in. Right? Then I have to completely read my 105 principles. The challenge in 105 is because it's a sector specific challenge. We said it is cost or fair value, whichever is less. 150,000 or 100,000, whichever is less is what we identify. My point is 150,000 is known to me because I actually paid cash. How do I know it is 100,000? Right? Which exchange should I look at it? What time I should look at it? It's a 24/7 exchange, right? 24/7 it runs, right? And the prices keeps changing. Right?
Many exchanges.
And many exchanges are there. But I think everything is probably referring to a Bitcoin. So some more or less exchanges will give you constant rate, but there are changes because they have their own gas fee. They have their own, I think, fees which are embedded. Everything is different. Now, the biggest challenge today in the crypto sector is the fair valuation. Valuation is the biggest challenge. How do I call what is fair value is a challenge. Of course, we'll say we go and look at 113, which is Ind AS 113 fair value measurement standard. That does tell you that take it from a most active market. Whatever is the active market, you can take the fair value from there. And in case of physical assets, you go for a most advantageous market. But what is active, what is advantageous is not clear. Right? Anything which is active today, US was probably very active, but after the Ukraine war situation, everything is falling down. The market is also slightly getting deteriorated. Now, can I call that as an active market? Is the biggest challenge we face, right? I think three things I told you, if I have to sum up, keep going, maybe keep stitching what we have learned is one, in our example, cryptocurrency is either an intangible asset or an inventory, right? The challenge that comes up if it's an intangible asset is how do I impair? Because I need to know fair valuation of an impairment. What point I take the fair valuation, that's a challenge. When I come to inventory, the challenge is again, how do I measure it? Cost or net realizable value, whichever is less, how do I measure it is going to be the challenge. FIFO, weighted average, how do I determine is a challenge. When I decide that I don't want this to be an asset, but I will move it to a held for sale. If it's a held for sale instrument, then I should apply 105. Same challenge again is applicable, that what is a fair value under 105. Are we so far going okay? All right, so this is okay, determining the cost for derecognition. What should be the cost of the derecognition? I think when we have to determine what is most important is a third bucket. What is the methodology that I should apply for derecognizing the cost? Like when I'm saying I'm selling the inventory, I will always go by FIFO. The first unit that I purchased is what I assume that I sold it first. May not be true also, right? But that is what is the assumption that I will generally make, right? Weighted average could be a biggest challenge. So we also say, why not weighted average? But weighted average has its own challenges in the crypto sector because I can buy one currency with another currency. Let's say I had a Bitcoin today. It's not through cash I'm buying today. Let's say I have Infosys shares. I can't pay Infosys shares to buy Wipro shares. And I'll have to first redeem, get a cash, and then buy Wipro shares. But I can pay Bitcoin to buy Ethereum. I can pay Ethereum to buy Terra, right? I can pay Terra to buy something else. So with that, what becomes very complicated is how do I do weighted average? Because I don't have a single measure of cost, right? That is the biggest challenge of, I think, a weighted average methodology because it's so fungible that you can move assets anywhere and everywhere that you would want. With that, I think we'll have to figure out how FIFO will be the best methodology. So these are all evolving, right? Everything we're speaking today is evolving. Some point there will be answers for all of this, but what is the best is who will find those answers. If we are on this side of the table who will find the answers, will enjoy the journey. If you're on the other side of the table who are posing the questions, which is also very good because we are challenging the market. But I think it depends on which side of the participant you want to be, right? And I feel as accountants, we should be very, I think very, very focused on what market needs, right? And then try grab whatever comes our way. All right, so I think that's about the concepts we spoke about so far. Now I'll again go to Murali's example. Sorry, Murali, your name is taken so many times now. He's got $150,000 of Bitcoins, 5 coins he has got, right? Let's say he sells the coin today. What we're talking is he now sells it. What happens when he sells it? Entry is very simple. Bank account debit, whatever the money comes up. What should be to is a question, right? It is to sale of intangible asset. If he sells it as an intangible asset, as it is, he just wants to dispose it of, then it is gain or loss on sale of intangible asset. If he's selling it as an inventory, because it's an inventory for him, debit is always cash or a bank. Credit is revenue. Because he is a trader in that asset, then what I'll have to credit is to income from operations, to revenue from operations. If it is revenue from operations, I should apply in the AS 115. Revenue recognition standard, which could be AS9 in our example of an accounting standard. Then I should see at what point of time control is transferred. What point of time risk and rewards are transferred. Is it when Murali just clicks that, okay, I'm ready to sell? Is that the time when the sale happened? Or when the customer or buyer accepts that, okay, I'm okay to now take it. Is it when it happens? Or when the smart contract is automatically executed in the fraction of the seconds? Is it when it happens? Or if there are exchanges, you are selling it through a medium of an exchange, what is the timing that I say that sale is complete? Is considered to be an accounting, I think accounting analogy seems to be more simple because it happens in fraction of seconds. So timing may not be that big issue. Control may not be that big issue. I think we should be able to get out of revenue pretty quickly. It will be like debit, cash, credit.
10 seconds span of time.
But what may be important here to know is that to whom are you selling? See, sometimes I don't directly sell it to customer. I keep it in an exchange and it gets routed through an exchange. Sometimes I know because I have to pay gas fee and etc. I convert and sell. I don't sell this immediately. I know if I sell in Binance network, I have to pay more fee. If I sell in Ethereum network, I have to pay less fee. Then what I'll do, I'll transfer all my assets through an Ethereum network. I think those are the cases where I have to be careful about what is the timing and what is the mode. Do you still have a control or not? But otherwise, I see this to be straightforward. If it is not an inventory, not an intangible asset, but held for sale, then of course I can't call it as income. It becomes other income. It's not a revenue from operations. It becomes a other income. So I'll again summarize. We said it could be either intangible asset or it could be inventory or it could be held for sale. If it's intangible asset, when I'm de-recognizing, it is sale of intangible asset. When it is inventory, when I'm de-recognizing, it is sale, revenue from operations. When it is a held for sale, when I'm de-recognizing, it is other income. So we spoke about recognition, measurement, de-recognition. Okay. I'll pause here. See if you have any questions. Any questions so far? Okay. No questions is all clear. Nothing is clear. So far, we're okay. Are we going to discuss disclosure requirement as well?
Yes.
No, yes, we will discuss. Dave is smiling. Yeah, we're going to discuss. Okay. Perfect. All right. Anything else you have? If you don't have any questions, let me ask the questions and see who is the person who will answer this fast. Okay, there's a question we'll pick up from Ramakrishna in a while. But I have a question for you quickly now, right? If a Bitcoin is purchased, right? Can it be called as a financial asset? We just discussed, I mean, just yes or no. The answer is no. He said it is, yeah, no. So someone is saying it's no, it's not a financial asset. Why?
It's not a cash.
It's not a cash.
No contractual obligation to receive.
There is no contractual obligation to receive cash.
Not an equity.
It's not an equity instrument. So it fails the definition of financial asset. So whatever we spoke, we're speaking from holder's angle.
Yeah.
Now I said it's all from Murali's angle. If I switch from an issuer's angle, Can it meet a definition of a financial liability? We still have to see that, right? I'm not saying that it is not a financial instrument. What I'm saying is it is not a financial asset
In the books of
the holder. But can I say it is not a financial liability in the books of an issuer? We still have to see that, right? So that's kind of what I wanted to kind of convey. Don't say that it's not a financial instrument. We should say that it's not a financial asset in the holder's books. Are we okay so far? All right, this is fine. I think we spoke about fair value. I will just spend probably a couple of seconds on this slide. Quickly help me, probably you can chat with me also, help me where in all I'll use fair value. Now we gave 3 examples, right? Intangible, inventory, held for sale. You can also tell me here, but you can chat, tell me where the concept of fair value comes in. If it's an inventory, why do I need fair value? For the purpose of impairment, carrying value greater than recoverable value. Recoverable value should be either a fair value or value in use, whichever is higher. There won't be value in use because it's not a business. Then the question is fair value. There I need to know the fair value. Point 1. Inventory. Where do I get the question of fair value? NRV, is it fair value? That's a good point. Is NRV a fair value? NRV is not a fair value. To Nupu's point, NRV is a net realizable value. What's the difference between realizable value and fair value? Realizable value is what other pays me. Fair value is at what price I can exit. Right? Fair value is an exit price. It's a market participant price. Realizable value is how much he's going to pay me. Let's say they pays me 10 rupees for this bottle. It's a realizable value. Right? Whereas if I have to exit in the market this contract, I need to pay 15. 15 is a fair value. Realizable is what I am going to get. Fair value is how I'll exit. Right? So therefore, NRV is not a fair value. My question therefore still remains. If it is an inventory, do I use fair value? I use only if I'm a commodity broker. Because in case of commodity broker, there's an exception that I will not have NRV. But what I'm going to have is commodity brokers will measure this at fair value through P&L. That is where we'll have a fair value concept. If you're not a commodity broker, for inventory, this is not applicable. Now I'll go to held for sale. Where do you think the concept of fair value comes? Held for sale. Someone can, Nupur, you can still type. All of you can type. I mean, where is the concept of fair value in held for sale? We discussed if it is a held for sale, we should either recognize it cost or fair value, whichever is less. Carrying value or fair value, whichever is less, is what is the recognition. In order to, in the example which I took, I said 150,000 is the carrying value, whereas fair value was 100,000. Whichever is less is going to be my recognition for held for sale. So that's where I would need fair value. Now the question is, in all places I spoke about fair value, how do I determine fair value? We'll go back to Ind AS 113. The standard 113, yes, absolutely. Ind AS 113 is what we will apply for fair valuation. Now the big challenges of applying 113 is all of this. Right? Now what are the challenges? The market to be used for valuation, since trading of most crypto assets take place across multiple exchanges. Which exchange should I use is a challenge. Point number 1. Right? Timing of determination of a fair value in a 24/7 market. Should I take midnight 12, early morning 12? What cutoff should I take? 11 o'clock morning, it was all good. 11:01, Rahu Kala started. Right? Things started falling down. What do I do in a Rahu Kala? Should I take stop at 11 or should I take 11:01 is a big question, right? Whether there is a evidence of manipulation in the market prices. How do you know? Market prices are subject to manipulation, right? See why today LIBOR is taking a sunset. LIBOR is no more there. LIBOR exchange was so highly manipulated. There was so many fraud which happened in the LIBOR market that LIBOR is now getting totally reformed with the new reference rates, right? We call it as IBOR reforms, the interbank offer rates. LIBOR market is no more applicable. We don't have it. It's wiped off because of many frauds that happened, many wrong data submissions that happened, right? People were submitting incorrect data to show increase in the profits. How do you know that what is market giving you is the right price? Right? Very difficult challenge. whether the market provides enough volume to assess. We have 11,000 coins, right? Bitcoin has got a high volume all the time. There is something called finance slumber coin, right? Nobody knows. Somebody would have bought it years ago. NFT, when we go to NFTs, right, non-fungible tokens, we were checking. There were tokens which never increase the value. It'll be like that forever and forever and forever, right? Because nobody buys it. There's no market. Interestingly, you cannot account crypto unless there's a market. And there's no market unless there is liquidity, right? Crypto gains value by liquidity. Let's say I have a coin. I never want to sell to anybody, don't want to do anything. This coin will never gain value. Because it never started with the price. Do you see what I'm saying? I mined something. I just created something. There's no cost of goods sold here, right? There's no cost here. I just mine. Mining cost is negligible. Very, very simple. But after I mine, I airdrop to somebody, right? Now, somebody whom I airdrop, if they don't release it in the air, that's why we call it as airdrop, right? And they want to just put it in the box and keep it, that coin will never reach the market. The person who got the airdrop has to release it to the market. Then the market will start buying, selling, and that's where the value of the coin will increase. If there's no liquidity, there's no value. In a market like that, the volume is very important. And because there are 11,000 coins, every day there's a new coin that is coming up. Which coin to invest? Should I go with Solana? Should I go with, what do I do? Which one is a big question, right? Volatility is very, very bad. Different methods of exchanging the currency and difference in pricing of the cryptocurrency. It all depends what data the exchange uses, right? All of these are challenges in valuation today. Is it so far making sense? So I think what are the standards we touched upon? If we can start noting down, we touched upon Ind AS 38, intangible asset. Ind AS 2, inventory.
36. Yeah.
Ind AS 36, impairment of an intangible asset. 105, held for sale. Yeah. And 113, fair value measurement. We also touched upon 109 to assess whether it's a financial instrument or not. We touched upon Ind AS 7 to assess whether it is a cash or cash equivalent or not. All of these standards put together makes a crypto accounting. Yeah. We're going good so far? Okay. If Nupur is alert on the other side, Nupur wanted to know whether we are giving disclosures. Yes, we are giving disclosures. Where the disclosure comes from, again, no specific disclosure requirements are presented. But of course, as we mentioned, MCA as part of the CARO requirement in clause 21 does talk about cryptocurrency disclosures, but that is more from the CARO reporting, more from an auditor's angle. But in the financial statement, how do I disclose? Depends on all the standards again. I go back to Ind AS 1, anything which is material requires disclosure, material gains or losses requires a separate line item, description and quantity of the various types of crypto assets, because Ind AS 1 is a disclosure standard, right? So I need to disclose basis that. If I go to Ind AS 8, let's say I was doing FIFO, I figured out a way to do weighted average. I need to disclose the change in accounting policy, right? I had a particular way of doing a crypto accounting. Now I changed that way. I need to disclose that. I was taking a critical judgments to assess few things because it involves a key estimates. I need to disclose those key estimates, right? I'm sure Shubham is also hearing all of it, and he will talk about what are the audit considerations now, because it's so highly judgmental that auditors have to have a solid evidence to document, and this evidence would be paperless. Right? Because everything is smart contract, everything is in blockchain. We sometimes may not even know the person who initiated the transaction, right? You may have a record of everything, but is the person's name, everything is correct? We don't know. There could be so many fake accounts today, right? Like, which is what Elon Musk is saying today, right? I'll do 5% of Twitter accounts due diligence and see whether there are fake accounts or not. We don't know how many fake crypto accounts are there. And surprisingly, it so happened, my memory is not supporting to remember all the names, but it happened in India, I mean, across the globe, that there was this one crypto startup who took all the money, invested in crypto, and he had a very complicated password, and he died with the password. Right? Nobody could crack it. It was everybody had accounts, right? It was all there. He forgot the password. He totally forgot the password. Everybody invested money, right? He got heart attack. He died. Nobody could crack the password. Apparently, when I opened when I opened a WazirX account, this is what my husband told me, that take the pictures because you have to answer all of those questions to get a password. It's very complicated password. He said, keep it in 20 places. Right? Keep it in places that we can fetch when you die. Like, okay, so you keep it because it's important that we remember those hashtags and passwords. It's very, very complicated algorithms. I think there are a lot of key judgments involved. How do you account for all of those uncertainties? How do you create a provision for all of those? We again go back to Ind AS 37, right? Any uncertainty, any contingency, anything which is on a prudent basis, I believe would become a loss or would have an implication on incurring a loss. I should create a provision, right? I may not do an anticipated income. I still follow prudent accounting, right, in India, but I still have to recognize an anticipated loss. So I think we'll have to do this in the 10 subsequent events. I'm just thinking people who are closing the reporting next 10 days will have to show the subsequent event that all happened with our terror, right? So the terror's disclosure might have to come. If they've lost the currency, they need to give a subsequent event disclosure because it's a subsequent event. I had it on 31st March, value is deteriorated, but we might have to still understand if it's a subsequent event, then the trigger of deterioration should have started on 31st March itself. But if the trigger started now, then I can't call it a subsequent event. Now one has to analyze that. There was a VAR situation on 31st March. There was already, I think, collateralized documentation available as on 31st March. Now, should I conclude that there is a trigger as on 31st March is a judgment documented with interpretation. If I conclude, I can account it as a subsequent event and disclose or do a adjusting accounting, depending on where it falls under. Not adjustment or not, yeah, adjusting event or non-adjusting event, as the case may be. In AS 2, we need to disclose all of this. In AS 38, because it's an intangible asset, you need to follow all the disclosures related to intangible asset. Opening balance and closing balance reconciliation should be followed. One very happy news is I don't have to do amortization. Right? When I do the reconciliation, the only difference of that reconciliation could be additions or sales or could be impairment. There won't be amortization. Okay. Is that okay so far? So we spoke about initial recognition, subsequent recognition, right? Measurement, derecognition, presentation, and disclosure. Like any accounting standard we look at, it talks about RMPD, right? Recognition, measurement, presentation, disclosure. A cryptocurrency has to walk through the same journey. When to recognize, how much to recognize, what to recognize. What should be the amount of measurement? What to present, where to present, what else to disclose would follow the respective standard guidance. We're okay? Okay. We're okay. All the virtual, I think people who are attending virtually, these are virtual digital assets. Yeah. Are we all okay? I hope there's still people. I can't see how many of them are there. But I'm hoping that they're all there. Okay, Manjunath sir, I don't think so Srinivas sir would be listening, but we're all fine. Can we get some clue that you're all hearing? Perfect. Okay, that's cool. Is it raining outside?
Check.
Okay, so whatever I spoke so far, okay, what is the time I have? I'll have another 5 minutes because 8 we'll have to wind up, right? So, okay, so I'll have to give 1.5 hours to him. We spoke about holder of the asset so far. Let's sum up again. What are all the standards applicable for holder intangible in AS 38, inventory in AS 2, held for sale in AS 105. These are like the major measurement standards. Disclosure could fall under 1, 38, 37, 2, as the case may be, whatever the standard is applicable for you. In AS 32 or in AS 109 is not applicable from a holder's perspective. This is as on today's stand. Tomorrow it may change. Tomorrow it may so happen that India says it is legal, right? It may so happen there are countries in the US who is accepting this as a currency, medium of exchange. They're saying everything can be traded in coins. Yes. I think there are a couple of countries in the US who are okay to go ahead and use Bitcoin as a medium of exchange. They measure everything in Bitcoin today. If that is the case, then I may fulfill the definition of a cash or a contractual right to receive a cash, etc. Standing today in India, the situation is it's not a financial asset. Are we okay? that are sitting today in India because they're all sitting.
So US, how many states?
Not very sure with the numbers, but at least 5 to 6 so far, I think, are giving. They're collecting, some states are collecting taxes in cryptocurrency. Some of them are saying, I can collect everything. You can actually use it as a medium of exchange. You can pay in Bitcoins, like the way we use Phone Pay today to pay cash. They are allowing them to pay in cryptocurrency in any place. You go to a hotel, you can pay in crypto. You go to a parking lot, you can pay in crypto, which in India today, very few people are accepting crypto.
That is legal.
In some countries, it is legal.
US.
Not the entire US.
5, 6 states.
Yeah, few states.
China is a bank. No, they are uplifting. So
But
this
they
is-
have their own currencies that they look at. China, I think, is a market which generally doesn't invest heavily into other markets, right? They always want to, they are, I think, more, I would say, they're organic. They don't like inorganic. They would just grow everything internally.
There is the US and completely.
Yeah.
So that's why. What is this Ethereum you are talking?
So these are different types of blockchain networks that are available where these coins are mined actually. So blockchain is a distributed ledger technology, which I think is more of a software terminology, not that I understand very well, but there's a process called mining that happens on the blockchain system. So when they mine it, there are different platforms that they create. Today, as far as I'm aware, there are 4 large platforms. One is the Binance, which is where the Bitcoin actually emerged out of that. Then there is Solana, which is where the Solana coin emerged. Then there is Ethereum and there is Polygon. These are like 4 major, I would say, blockchain technologies available today. On top of which the mining happened and the coin got emerged, right? The intangible asset got emerged. When they use the exchange which is already available, let's say Binance is an exchange, Binance is a platform, the blockchain network which is already available. I can go pay them some money and use their technology to mine my coin. We call it as token. So I don't use my technology to mine my coin because it needs a lot of money for me to build the technology. Your technology, I come and I will mine something, right? And I will create a coin that is called as token. So when I have my own technology, it's a coin. That's why Bitcoin is a coin. But when I use someone else's technology, it is all tokens. But we interchangeably use it. The 11,000 coins that we speak about, it has combination of coins and tokens. So I think interesting thing you want to do, if you want to know, is that just get one of the account. Let's say you can get either a Coin DCX or a WazirX, one of the accounts. Just experience in terms of how the fluctuations are moving. You can just buy. That's what I've done. I've invested only 10,000 rupees, not more than that. Very safe, just to learn that what it is, so that I talk some sense. But 5,000 rupees decent land I've got, and I've got some USDT with me. That's it. So,
But I was told those who started in the beginning,
yes,
investing.
huge
I think
money.
They have made huge money. And now it is highly risky.
Yes. Yeah, I have a very different philosophy. I'll not talk in this group, but I feel anything which is human created is not valuable according to me. So I speak all of it. Isn't it? Money is created by us. It's the value can deteriorate any time, right? But the nature is created by something that we have not seen, right? So it's a very different philosophy I carry, but we have complicated as humans. We value so many things to which we only create value, right? And so it's a very different thing. Anyways, so Srinivasa was telling me there are a lot of gurukulas which are open. If I become too philosophical, I'll have to go there, but we'll keep it. You're right to that extent, actually. People who invested in Bitcoin in 2009, they got it at throwaway prices, like $100, $10, $5. They could buy one coin at like throwaway prices. $100 was not throwaway, but $100 is still okay. The people who bought it that point of time took a risk. They just invested and took a risk. That point of time, which was $100 in 2009, today is $30,000. They're still better off. Right? But who is suffering is the latecomers like us. Let's say we buy at 40,000, it's become 30,000, it's hugely volatile. But the early birds are definitely making well. This is early birds when the concept started. But there are early birds of new coins also. There's so many new coins, but those are not performing as much as Bitcoin
But the
did.
problem was nobody understood what the concept is.
Yeah.
So we did not come forward.
Yes. Yes. Yes.
Now it is too late to enter the.
yeah, now if there is a concept of a time machine, we can just quickly go back, collect some Bitcoins. Great money they made. Yeah. All right. So what we're talking now is in the books of issuers. Okay. So what will happen in the books of an issuer? Issuer is the one who is giving an initial coin offering, right? If that initial coin is variable in nature, does not link to any equity instrument, and it's just the coin they're giving, that's a liability for them. Because it's an ICO, they promise to give you something in the future, like debentures. When I issue, I say cash debit to debentures, liability, right? Because I'm still promising to give you back your money after the issue becomes successful. So for an ICO, it is a financial liability. But if they say, no, you just give me the money, I'll give you coins, but I'll give you exact amount of an equity if my ICO becomes successful, or if there is some event that I've mentioned is going to happen. There is a contingency I've attached. If this contingency is fulfilled, and if the event occurs, I'll give you an X number of an equity instruments at X value, which is very rare. Very, very rare that somebody would make an ICO. ICO is initial coin offering in the form of an equity is very rare, but if it meets the definition of an equity, where it fulfills a fixed to fixed criteria, what is fixed to fixed criteria? There is no variability in terms of money that I'm going to get. There's no variability in terms of number of shares that I'm going to get. I have a residual value, which means I've got at the time of liquidation, I will not be given a preference. I'll be given a last preference. I don't have a liquidation preference. Then it meets the definition of an equity, which is highly, I would say, Harry Potter situation, right? Unlikely that it would happen. But if it satisfies, then it could be an equity instrument also. If it is given as a prepayment for goods or services, that's also possible. They say, okay, I'm coming up with an ICO, but tomorrow you can buy some goods and services out of it. I'm giving you coins. You can utilize this to buy Nike shoes because they've opened up their office in Metaverse, right? They have got their own big presence in Metaverse. So you can now buy virtual shoes and wear virtual shoes in the virtual Metaverse and run around. Interesting concept, which I know our partner said was that if I run in Metaverse, will I lose weight in Earth? Right? We don't know, but he can wear a Nike shoes interestingly and run around. But if it is for the goods or services, it could be basically for the future goods and services. Accordingly, I should recognize a provision. It should be in AS 115 future sale. If none of this is met, but it has some unique guidances, then I'll have to create a provision because I still got cash. In an initial coin offering, all of you paid me cash. What should be credit? Should be either a liability or an equity or a revenue, or it could be something. It could be a derivative also, could be a provision also. We don't know. Depending on the type of an ICO, we need to analyze the guidance. Does it make sense? Therefore, I think what we're concluding here is, though I said from a holder's perspective, it's not a financial instrument, from a issuer's point of view, because there's an obligation for me to pay cash or another asset for you in the future, which could be an equity instrument, it always meets the definition of a liability. It most of the times meets the definition of a liability. So far, okay? All right. This is okay. I think that's all about, issuer. Stable coin we quickly spoke about. The concept of the stable coin is it is not volatile. But with the change in the scenarios, we'll have to see how it can be called as not volatile. But stable coins are very simple. You just account it at cost because whatever you incur is a cost, and there's no impairment per se that you could look at it. I think maybe go to the next. Here actually. In general, stable coins is not a cash because again, not backed by a tender, but I can always recognize at cost. Right? It may meet a cash equivalent definition in certain cases where it is pegged to a US dollars, which is not too volatile, right? And I know that I can convert into cash with a very less risk. And I think there's a huge liquidity in the market, then I may call it as cash equivalent. All the slides we made probably 10 days ago. All of this was very beautiful at that point of time. With a change in the scenarios, we are not able to commit what we have written here because we'll have to see everything is changed, right? If it is a collateralized coins, then of course, if these are pegged to another fiat currency, then the stable coins probably may not have a proper 1:1 backed concept. Then I might have to look at having it at fair value. So if in my example, Murali wasn't holding a Bitcoin, but he was holding a USD tether, if USDT was his coin, then what should he record that at? Should it be cash? No, right? But I can call it as an intangible. Yes, it's an intangible. How do I measure it? At cost, right? That's what I think we're trying to say. There's no impairment per se is applicable because it is stable. Okay, NFTs is kind of evolving, I would say. It is evolving so much that we can't really put anything here. But again, say NFT could have three parties. Issuer of an NFT who mints NFT. Like I said, I take this nice bouquet, take my picture and mint it. That's my picture that you can imagine goes in the open sea. Nobody buys it. It's a secondary thing. They may buy it because I force him to buy it at $0.001. But I will put it in the open sea. That becomes an NFT, which is issuer. I issued it. I will offer it for sale. If you are very kind enough and give me $1, I'm happy. I will just sell it at $1. That is basically a person who is transferred. Then he's a holder of that NFT. But there are people who are lending NFTs. Let's say I have a very interesting, like a unicorn picture, right? I have a very interesting unicorn picture that is needed by a unicorn, the company which is just a startup, like how we lend websites, right? I have a website address. Let's say I've got a website address called www.crypto.com. I would be very rich today, right? Because all the crypto companies would come to me that I need that website because crypto.com is not easily available, not at all available, right? If I could have owned that, I would have become a millionaire today. Similarly, there are certain NFTs which they don't want to transfer the ownership. They just want to give a right to use. Okay, 3 years you use this NFT, utilize for your business purpose, then I might have to apply the definition of lease. Because I'm lending the NFT, then I will follow Ind AS 116. Does it make sense? Yeah. Marketplace is in between. Marketplace is OpenSea. OpenSea that charge you commission to mint, right? Or to mine that particular NFT. They'll charge commission for you to mine that. I understood it's very simple process. I haven't done it, but if you're a developer, I heard it is super quick. You just take something, just upload and say, yeah, it's super easy is what I've heard. Because of that, there are so many NFTs like rocks on the earth, right? Which just upload it and have no price. Right? So then they'll have to recognize an income or a fee. Okay, this I think I'm not going to talk about this. I'll quickly show you, I think, what we discussed so far in the interest of the time. I think we have summarized each standard what we spoke about, right? Like standard-wise crypto implication. One, Ind AS 1 presentation. Ind AS 2 we spoke about inventories. 7, whether it is a cash or not, whether it is cash equivalent or not is a question. Accounting changes, estimates, policies. I'll apply 8. Subsequent events, considering the new Terra situation, I might have to apply a subsequent event guidance. Income taxes is another thing, right? We know from an India perspective, it is 30% state taxable. Then I'll have to look at income taxes guidance. Should I create a deferred tax? If I have an asset in my books, I have an intention to sell, then should I create a deferred tax considering a timing difference, etc. I think is what we'll have to look at from a 12 point of view. We said it's not a PPE because it doesn't have a physical substance. If I'm giving the coins to my employees, cryptocurrency to my employees, then it may also be an employee benefit. I'm giving them in the form of a crypto their salary. Then my employee cost is measured in terms of the number of coins I've given, which is what I think most companies, most crypto startups are doing. They're just giving them some coins to create liquidity. They're saying that's how I create liquidity. I hired 10,000 people. I have my own coin. Who will sell it? My employees only will sell it. Right? Just dump on them. They create the liquidity. There are many tokens that companies are creating to create a liquidity. They give those tokens to employees and say these are utility tokens. You can go redeem this token anywhere and buy anything. So that is employee cost. Government grants. So far, government is not granting a regulation. So what do they grant? We don't know. We should keep aside. 21, I think, is okay. Borrowing costs, not much at this point of time. Related party is a big thing which Shubham would talk about from an audit perspective. So this is huge, right? We will never be able to track two parties' relationship in a smart contract. It's so highly confidential. We can track it. What happened? Who did what? But what relationship is highly confidential? So that's where I think the question would come up. 32 financial instruments. If, let's say, from a issuer's perspective, I issued an instrument with a combination of debt and equity, then it could be a compound instrument. Right? I would have issued a convertible crypto, right? Like a CCPS, compulsorily convertible preference shares. I'll do CCCS, compulsory convertible crypto shares. You never know. Then it may become a compound instrument. I should apply Ind AS 32. Earning per share, we have written no, but we were deliberating. It could be applicable because how will it impact my earnings at some point of time? That probably we'll have to think through. Impairment, we spoke about. If none of the standards are applicable, you still expect that some loss will happen, then you will recognize the standard provision under 37. We spoke about intangibles, we spoke about investment property. Now mining, we've been talking about mining, but it's not agriculture, right? So it's a crypto mining. When I use the word called mining, initially there was a confusion. What is mining? It is crypto mining, right? So nothing related to our agricultural mining standards are applicable. Share-based payment, if it is linked in the form of a share, then I should apply Ind AS 102. If the crypto is used as a purchase consideration in a business to buy, then I should apply Ind AS 103 to fair value my purchase consideration. 104, not much. 105, we spoke about held for sale. 107, disclosures of financial instruments from a issuer perspective is applicable. Operating segment, for now, no, but we still have to look at. Operating segment is applicable for a crypto startup. But whether crypto per se has an implication, we don't see at this point of time.
Depends on the CODM as well.
Depends on the chief operating decision maker as well. 109 we spoke about. 1110 I think is more from a if you are taking hostile takeovers, right, etc., then consolidation is applicable or not from that perspective. 113 is the biggest problematic standard. Fair value, we spoke about the challenges. Revenue, of course, we spoke about. If you're selling crypto, it will be a revenue. If you're giving any NFTs on a lease basis, then it could fall under leases. I think this is all the sum up of crypto application under different standards. I'm pausing here. I know I've overdone by 8 minutes, but I'm hoping this was helpful. Are we good? People who are listening on the or virtually, are we okay? Can we hear from you? Do you have any questions? I know we had a few questions. We'll take it towards the end. I'll look at the questions. Okay, Ritesh. Ritesh is also active? No. I'm just thinking we have 30 and 15 of them are known to us. Are we okay so far? We're good to go? All right, Shubham, can you hear us?
Yes, Asha.
Perfect. Shubham, do you think we're at 6:40 and we take a 5 minutes break, 6:45, we can start on auditing and you have 1 hour, 15 minutes?
Sure, that works.
Okay, so we'll break for 5 minutes. We'll start at 6:45 sharp.
Sure.
Shubham, can you share the screen? I don't know whether you have that option to share. You should.
Not really. So actually, yeah, I was asking before the session had started. I'm not okay. Now I can see the
Okay.
option.
So I'll stop sharing.
Now, just give me a second.
Yes, we can see the screen.
Okay, great.
All right. So we'll start in 5 minutes, right? I'm going on mute.
Sure.
Hello, Shubham sir, am I audible?
Yes, just a second.
One second.
Yes, he's not audible to us.
DST perspective.
Audible, sir?
2 or 3 days back, it came out.
Just a second.
This for only.
Okay, sir.
So, yes, you're audible.
Shubham, I think we're good to start, right? If everyone is back.
Sure, Asha. So, hi everyone, welcome back. This is Shubham Bindal, and we will be discussing throughout the rest of the time that we have. We will discuss about the audit considerations that we have in a digital.
Shubham, sorry to cut you short, but we can't see you. I think your video is off.
Okay, I hope now you guys
Now
can
we
see.
can see. Yes, over to you.
Thank you, Asha. So, yeah, so we will be discussing about audit considerations in a digital asset ecosystem. We will try to capture as much as possible, but as Asha mentioned, right, this is very vast, and we can only scratch the surface while we are discussing about it. What my objective throughout this session would be to create a kind of a questioning mind, or to just to touch upon certain aspects so that people start thinking about it from that perspective, that there are challenges apart from accounting aspects. There are certain challenges related to when we are auditing. Now, when we talk about challenges, it also helps us in identifying new opportunities, as Asha discussed. a lot of audit firms which may not be big four, they are getting an opportunity. Everybody is getting an opportunity to start from the scratch, right? And when we are starting from scratch, everybody is starting from scratch. It gives us an opportunity to become a market leader, right? So any firm, any audit firm can become a market leader today by performing research in this area, by conducting sessions, performing trainings within themselves, basically creating a capability in themselves. So now what would be our core objective when we discuss about audit considerations? So first of all, I would like to give you an overview how an audit would look like, what all areas that we will be touching right from the start, right from the client acceptance process till the time that we report. And in the midway, we will talk about how to assess risk, what would be the challenges when you're performing a client acceptance procedures, what would be the independence considerations. We might also talk about how we can use or utilize blockchain as an audit evidence. We'll talk about what kind of challenges that we might face and what can be the advantages, right, when we are using blockchain as an audit evidence. We will also discuss about certain considerations related to significant, while we are testing significant assertions of a financial statement. We will discuss about related party considerations, income tax considerations. Although we won't be getting into much detail, but we will try to touch upon and see, what could be potential challenges that an auditor might have to face when we are dealing with digital assets. And we will talk about, while we are drafting an audit report, what all things that we have to keep in mind while we are concluding our audit, when we are, performing that SAD, and when we are having that audit committee meeting, what would be the areas that we need to focus on? So that is something we will be talking about today. So this is an overview. The audit process, we have tried to replicate the whole audit process here, right from the start, right from the client acceptance and continuance procedures. While we are, discussing about the client acceptance and continuance procedures, we will be taking references from guidance note on independence of auditors issued by ICAI, from the series SA 200 to 299, which talks about the general objectives of an audit and how to, maintain the quality. And then we will talk about risk assessment, process controls, how we need to understand the entity. We'll be taking references from series SA 300 to 499. We will discuss, how to assess risk, what would be the key challenges. We will try to touch upon key inquiries that we may have to make with the management. Some practical challenges that are there because of the technological aspects of this the digital assets. Then we will also touch upon how we can utilize blockchain as an audit evidence. You guys must be hearing a lot about it, right? A lot of articles are being printed that blockchain, once blockchain is there, we won't have to do any reconciliations, right? We don't have to do any related party reconciliations when we are performing a consolidated financial statements. Sometimes I have heard people saying that we won't need Hyperion, right? Because we can have all the data on the blockchain and then everything will be linked. We don't have to perform any reconciliation and consolidation will become very easy. So we will discuss about it, how whether it is such a rosy picture that we are seeing today, whether it is possible, and even if it is possible, what would be the key considerations that we have to keep in mind while we are in a practical situation. We will discuss about significant assertions like how to ensure completeness, what would be the key challenges when you are trying to test the completeness assertion. We will talk about valuation assertion, although we have already discussed a lot while we were talking about accounting, but I'll try to bring some thoughts to the table, some of the key challenges that I could find on the internet while I was researching for this topic. I'll try to share it with you. I'll also try to share a few examples, from an audit perspective, what we have seen in the past. Maybe mostly examples would be from US, because that is where right now, what we are seeing is all the Bitcoin, Ripple, Ethereum, all are in the US most popular. So we will discuss some case studies from there. Then we will discuss the other considerations, as I mentioned. We will discuss about related party. While we are discussing about the significant assertions and blockchain as and evidence, we are trying to take references from SA 500 series. While we are, assessing risk, we might also include some reference from SA 620 using an auditor's expert, right? Because a lot of time it might happen that an audit firm might not have that information, that capability to test a particular system. Similarly, there is some capability challenge in terms of sometimes valuing the NFT or valuing any other digital asset, right? So we might have to loop in an expert, and then we will also have to review their work, right? Because the ultimate responsibility of the audit is on us. So we have to keep all of these things in mind. We will discuss about subsequent events. What are the significant procedures that we can do? What can happen if we ignore subsequent events? Analytical procedures, right? SA 520. So analytical procedures are a must, because as we have huge amount of data that we are auditing, it is not possible for us to just select samples and test the perform a test of details, or take some documents and test it, although we will be doing that, which is necessary. But then we will also have to develop some analytical procedures where we are auditing such entities, because we need to address that risk, right? And we need to cover the whole data from a standpoint that the financial statements are free from material misstatements. So we will have to discuss all of that. Similarly, if I talk about SA 501, which is audit evidence specific consideration, which talks about inventory, litigations and claims. So as we discussed while discussing accounting, there is a possibility that a blockchain asset or a cryptocurrency, for that matter, may become an inventory. So we might have to go into the standard SA 501 and see what implications are there. And there's a possibility that ICI may have to come up with a guidance note specifically for this. As we were discussing during accounting also, a lot of guidance is needed for accounting per se. Similarly, we need a lot of guidance for auditing as well. What could be the risk involved? How to address those risks? What can be the tools that an auditor may have to utilize or can utilize? So all of that, that is an overview that I wanted to give. We will be discussing everything in detail. I will try to discuss in detail, although we won't be able to cover everything since it's huge. And considering different business models are there, different technologies are there, it becomes even more challenging to cover everything from an audit aspect as well, right? Because in my sense, what I understand is whenever you start an audit, you have to understand the business underlying. Once you are able to get an understanding, a deep understanding of the business of client, then only you will be able to understand the risk involved, and then you will be able to address those risks with your procedures. So having so many business models around, so many so many developments each day, it becomes very challenging for an auditor to keep track of everything. Now let us discuss client acceptance. But before going into much detail, let's first address independence considerations, because in this scenario as well, independence considerations remain critical. We have taken reference from guidance note on independence issued by ICI for this. The guidance note explains independence in two ways. First is independence in mind. So whenever we are performing an audit, we should know that we are independent, so that our professional judgment, professional skepticism does not get hampered. Similarly, the other part is independence in presence. That means we are able to present that we are independent. The guidance explains that if a person, if a layman or a professional as well, trying to assess whether we are we are independent or not, the person should be able to reach to that conclusion that our professional judgment was not hampered, professional skepticism was not hampered. Now, there can be certain challenges in digital currency or digital asset scenario with respect to the independence. The examples could be, so the guidance note explains 5 threats, but all threats may or may not be applicable. The significant ones would be self-interest threat. So why it is? Because, so suppose I'm having an audit team and there is a member in my team who has invested heavily in the blockchain, any of the cryptocurrencies, for example, Bitcoin, and we are auditing Bitcoin. Now they have a self-interest. Will I be able to verify that? It's a big challenge, right? Because the transactions that are happening are anonymous. So it's very difficult for me to keep a track whether my team member is having an interest in that entity or not. Similarly, it is very difficult to present to somebody that I had kept a record, or I was mindful about it, that my team member is not heavily invested in that company. So it becomes very challenging when we are dealing with an entity having digital assets. Similarly, NFTs, right? Let me give an example. Nike has recently, Nike has recently released their sneakers in an NFT world, very recently, and they are getting sold at exorbitant rates. Now, suppose one of my team members has purchased any Nike's sneakers in a virtual world, I will never be able to track it. It will be very difficult for me. The second threat which is there would be related to advocacy threat. Why? Because a lot of time it happens that we are so involved, we are so passionate about technology, the technology that our client is following, we are not able to challenge it because we are so fascinated about it. We are like, we are always thinking that yeah, this is correct, the business model is correct, because this is a startup world. We keep on hearing things day in day out. We are watching Shark Tank on a daily basis. So if a client is coming up with a kind of a business model, you may not be able to challenge it because we are already convinced, right? Then there is a threat that we may get rejected by the client as an auditor. Suppose, so everybody is trying today to get, build a knowledge base about these clients. Now, suppose an auditor gets an engagement in a digital asset, the auditor will try to keep the client with himself because that will bring him accreditation, right? That will bring a credential to his name that the person has audited a digital asset entity. Now, in that scenario, we may get bias towards the client, towards the management, or we may not put our views forward just so that there is no disagreement and there is no replacement of auditor. So while we are drafting, or we are again looking at the policies that we have from an independence perspective in our audit firm, we will have to think about all these scenarios and we will have to try and address all of this. Honestly, I don't have an answer right now how we'll be able to address it, since I'm saying that it is anonymous. But all the profession will have to start thinking from that perspective, how we'll be able to address this, how we can come up with a solution so that we can address this independence consideration. We can have a standardized policy which would be able to cover all of this. All those thoughts, maybe in future we'll be able to see. Other than the guidance on independence, we can also refer SA 200, which talks about basic principles governing an audit. SA 210 terms of audit, SA 220 quality control. We will be discussing all these standards throughout the slides. I hope the speed at which I'm going, it's fine. And I am very passionate about this, so I keep on talking, and sometimes I keep on talking at a very fast speed. So please put your questions, or put a note here so that I know if I'm moving at a very high speed, and I'll slow down. Now let's talk about what are the considerations that an auditor needs to keep in mind while performing a client acceptance and continuous procedure? So the first and foremost would be auditors and skills competencies. The auditor will have to see whether they have appropriate skills, appropriate competencies with them. A few challenges that the auditor might face, while assessing it, or an auditor should keep in mind while accepting such audit, would be first of all the regulatory environment. It's keeping on changing on a day-to-day basis. Being up to date to all the information that we are getting on a daily basis, it's very difficult. So a lot of analysis that we are seeing each day, a lot of, in fact, even if we take a step backward, a lot of business concepts are coming each day with their unique risks and challenges. So keeping ourselves updated throughout the period is the foremost challenge when we are dealing with an entity having digital assets. Be it they are investing in a digital asset, or they are, whether they're a holder or they're a seller or they're an exchange. All of this, each entity would be different and may have different kind of risk involved. Similarly, the second challenge would be that the resources that we have, the talent, because in this market right now, we don't have many people who have hands-on experience, right? Even if I would like to have team members in my team, I will have to have a product mix kind of, wherein some of the members might have some experience, some of them have a lot of experience, some of them don't have experience at all. So it becomes very challenging to select a team. So we have to, while we are performing the client acceptance procedure, we have to keep in mind that whether we will be able to, whether we have the necessary skill set, necessary talent right now, or can we hire it from the market, and whether it is even possible. The next point could be, the next point could be regarding whether we will be able to complete all the audit within that required time frame. Sometimes it can happen that we might come up and think that we can start providing training to our staff, right? We will provide trainings. We will have access to Udemy and other learning platforms, and we will develop that capability. Then we have to keep mindful that whether do we have enough time, whether we will be able to complete the audit within the set time frame. Otherwise, it will create an unnecessary pressure on us because of those threats that we talked about, maybe because of the fear of getting replaced, or fear of disagreement. If we don't have enough time, we might end up in a critical situation towards the end of the audit. Then we will also have to understand from a technological aspect. What may happen is that blockchain as a technology is so complex. Sometimes we might have to have certain tools from market. We might also need we need to hop in we need to include a specialist from an IT's perspective or from a valuation perspective. So do we actually have such specialists available these days? Do we actually have access to them? Will we be able to supervise the work that they are performing? Will we be able to review the work that they're performing? All of those could be the considerations that we need to think while we are performing client acceptance procedures. Then we will, so again, I'll switch to other slides. We will talk about management skills and competencies. We will talk about management's integrity and business strategy, how to assess that, what will be the challenges related. We will talk about processes, controls. Now, although I think I discussed mostly challenges related to auditor skills and competencies, let me again go through it. So we discussed about reporting developments, right? A lot of industry, technological, financial reporting developments are happening day-to-day basis, which can affect our existing clients and potential clients. So it is very important to stay apprised. Now, how we can stay apprised? We will have to invest time I mean, in fact, Asha and me, we were discussing the other day that we cannot learn such new skills just by following a 9 to 5 approach, right? We have to spend more time, and this would be a responsibility of each and every team member in an audit team. They will have to go beyond their work timings, and they will have to invest time in understanding it. I'm not saying that people should keep on spending lots and lots of time and forget about the work-life balance. But the point I'm trying to make is these things require an additional effort from our side. Even if we are getting time during our office hours, what people might do, they might not utilize it to develop such skills. So we need to invest in these skills because this is a future. We may not know right now where this is headed, how much benefit we can get out of it, but this is here to stay. So it is very important that we start investing time in this. Regarding talent, as I mentioned, it is very difficult to have to find people who have the right skill set right on the market. So we will have to make sure that we are training ourselves, and we are training our people within the firm. We will have to conduct internal open discussions. We will have to we will have to attend such webcasts that the ICI is arranging regularly. We will have to be part of study circles. We will have to make that additional effort, extra effort, to train ourselves and to also train our people. And I understand it requires a cost as well. If you are asking the team members of a firm to start attending trainings, um, a lot of people might do it in their extra time, but a lot of people will be doing it in your office hours. So there is a certain level of investment required, but it is, trust me, it is worth it, because as I mentioned, this is the future. Once we are able to train our people, and also simultaneously, in fact, when we are training our people, when we are acquiring the talent, we are staying apprised, we will also have to see whether we will be able to supervise the work that is being performed by our staff, by the specialists that we have. We will have to we will then have to understand that adopting to these kind of ecosystem will require adopting to new risk and different risk. We will have to think from a business perspective. We will have to think, what if this happens? What if my client loses the private key? What will happen if the exchange on which the cryptocurrency is getting traded, whether if they get bankrupt, what would be the legal implication? Lots and lots of other things. What if the data on the blockchain is not correct? It itself is not working properly. Suppose the blockchain is not working properly. A lot of things we will have to understand, and we will have to take into consideration while we are accepting the audit. I hope that makes sense. Whatever I'm talking.
So far, yes, Shubham, we in the room are absolutely following.
Okay, thank you so much, Asha. Okay, so next point, after we have considered our skills, our capabilities, competencies, we will also have to assess management skills and competencies. And in today's environment, when we are talking about 235 startups, in fact, this was the number when we presented earlier, in 2021, in 2021. Right now, it can be 100 other startups. So there is a challenge, all those people who are starting these startups, they are tech people. They are very good at the technology, but they may not be that good at finance, right, at accounting. So it again poses a challenge. We are not sure whether the management understands it from the accounting aspect, whether they are also focusing on the reporting aspect. They must be doing a lot of things, right, from a technology aspect. We will have to assess, right? We will have to assess the process and controls that they have, how they're maintaining books and records. There's a possibility that they're having a software attached to their blockchain, which is converting the data from blockchain to some numbers, and then those numbers are getting input into our ERP system. Now we are talking about 3 systems. So there are technological challenges also. Sometimes as an auditor, we may not be able to understand how that particular technology is working. I can take an example here. What happens in background, we may or may not know. For example, so we were talking about Tether also, right? So there is an entity called Tether. There was a controversy that had happened a few years back, and it was a controversy. I'm not putting any conclusion to it, but what happened is, so Tether was an organization, and they had issued a stable coin, stable USD, which was pegged to a US dollar. They said that each stable coin is equal to $1 US. Now your value will not increase. So what we are saying is that every time the stable coin will be of $1, and it is highly liquid, because whenever you want, you can give it back to us and we will repay you your $1 whenever you want at the same time. So this is what they written on their website, and they received a hell lot of money. Now how they were doing it operationally is they were keeping a reserve. So suppose I have issued 100,000 stable coins, I'm keeping $100,000 in my bank account, whatever I received. This was the whole scenario that they were following, or they said that they're following. Now what happened is, they also mentioned on their website that we are getting audited, right? There is an auditor appointed, they will keep on auditing us. After a certain time, they released a statement, and they changed the statement on their website also, that so they released a statement that the auditor is asking too many questions from us, and this is coming in way of how we do the business, and it is very difficult to invest our energy in answering auditors' questions. So we have fired the auditor. Now from an auditor's perspective, again, as I was talking about, there could be a threat, right? Threat of disagreement, we might get fired. But what they did was correct, because after some time, what happened is, after some time, there was an exchange on which this stable coin was getting transferred, or getting exchanged. There was an exchange there, and the entity was actually investing all the reserves they had into that exchange and investing in bitcoins. And due to that, since they had pile of cash with them, the Bitcoin price started skyrocketing. As soon as the stable coins were getting sold, Bitcoin was also getting at a skyrocketing the price as well. After some time, it was come to the picture. There were investigations that had happened, and so the US government said that we do believe that the management was actually utilizing those funds that they received as a reserve for stable coin into into Bitcoin, and they are trying to get profits out of it through a related party company. Now what are the lessons that we learn? First is, the auditor did the right thing. We should keep on asking questions. We have to keep our professional skepticism alive. We have to keep ask as many questions as we want, and we have to satisfy ourselves in terms of the business model that the client is following, the technology that they are following. That is very important, because suppose at that time the auditor had not asked so many questions, it could have been a big challenge for them once this concept came into picture. Then it is very important to understand the process and controls. And again, through this example, we come to understand that when related party transactions are there, it is very difficult to identify them. So this was an example, and if I try to correlate here, when you are an engagement where we been auditing, suppose an entity called ABC Corporation, what we would do is we will have to understand their process, their controls, their business, what business they are actually trying to do, what is their business model. Right now, a lot of people are questioning business model of Paytm, which is quite late, right? Once it got listed, people have started asking what is actually the business model, how they are going to generate profit. My belief is that when we are accepting the audit, we should understand that from management. I'm not saying that we'll get into much detail and the client will provide all the information, but we should have a basic idea, right? What is actually the basic business model of the company, and whether that makes sense. Because in the example of the stablecoin I was talking about, it does not make sense, right? The company is getting dollar value equivalent to the stablecoin that they're issuing and then keeping it in reserve. how will they be able to generate revenue? The company said that they'll be getting some charges, some gas fees, all of that. But again, whether that model is sustainable, does that make sense? Are they actually trying to pitch that only? We will have to understand laws and regulations that are binding on the business, on the entity. We may also have to understand about the personnel that are driving the business, the business owners, right? What is their history? Suppose we know that there is this owner who has created this startup was actually involved in some other controversy before, so that we need to keep in mind. We need to identify the unique risks that are related. We may also have to understand from management what all specialists that they are using, or even if they are using any specialists at all, whether they have access to it, who can be those specialists. All these questions, if we understand beforehand, this will really help us to avoid any critical situation at a later stage. One question might come, how we can perform all of this. So the standard talks about, so the standard says that we may perform inquiries, we may also perform some analytical procedures, and we can, may take some documents as well from management. So that power is still there. What we need to do is we just need to exercise it. Moving forward, now when we are accepting an audit from management for an entity, again we will have to assess the business management's integrity. Okay, one point I think I forgot to mention is regarding the other skills, and so the example that I gave was also related to integrity. But again, skill sets are also important. We need to see whether management has someone qualified at the top. Do they have a CFO? Does the CFO has any experience in such kind of assets, right? Or if they don't have a particular experience in such assets, do they have any related experience? So all of that has to be kept in mind. Whether the technology that they are following is that reliable. Whether they are they accept this fact that the technology is rapidly changing, and are they ready to adopt new technologies in future. So all of that we have to keep in mind. Then management integrity, again the example that we took there, we need to assess what is the management's integrity. A lot of time it might happen that they are bound to, the business is such that they're bound to make some adjustments, right? So we have to understand that the market is very volatile. For example, for Bitcoin also, we can see that the market is very volatile. Now, if the management is taking profits out of it, they may come under pressure to manipulate the data as well. Whether the management is having a lot of related parties in their system, that also poses a challenge for us, whether we'll be able to test that or not. And there can be an indication for management integrity as well, because why would they keep so many related parties? Then the nature of the digital asset is such that we may not be able to verify who's the ultimate holder of those assets, who's the ultimate owner, because there is no ownership certificate. So that poses a challenge for illegal activities, fraud, for that matter. So we have to keep all of this in mind. We have to see what are the laws related to KYC. What is the process of if a person wants to open an account on our client's stock exchange, crypto exchange, or an exchange for that matter, what all documents they are taking from them. All of this we have to keep in mind. We have to keep in mind the business strategy that they're following, so that we are able to assess whether we are in the position to accept this audit or not, or even if we are accepting it, what would be the challenges that we might have to face and how we are going to deal with it. Then again, we will have to understand the processes and the controls that the management will be following, especially focusing on the IT implications. People have this tendency to believe whatever is on a blockchain, that is absolutely correct, that is 100% true, but it's not true, right? a lot of time because of some technological challenges, because of some human error, there is a possibility that the data may not be accurate and complete. So we have to keep in mind, and we have to see whether management is also keeping it in mind, whether they have placed sufficient controls in the process to verify that the data information that they have on the blockchain is appropriate. Does the management has proper internal controls? Again, whether the management has personnel to review those controls that they've placed. Have have they placed controls with respect to access to private key? Because that is a big challenge. Suppose there is an exchange, right? And this exchange has data of a lot of assets. For example, KuberX, right? So in KuberX, suppose sorry, WazirX. So in WazirX, suppose they have information of a lot of clients, right? And the private keys associated. Now, suppose they lose the access to private key, or there is an entity which has made significant investments in cryptocurrency. Suppose they lose their access to private key. What would be the implications? Have management placed controls with respect to that? In case of WazirX, will there be an implication from a litigation perspective, right? So all of that we have to keep in mind while we are accepting client engagement. I hope I was not too fast regarding this client acceptance part. I am not able to see any questions though. So when people are not asking questions, either everything is clear, or every concept is clear, everything is clear on their mind. So please, whatever is the case, I would really request if someone can confirm if you guys are able to understand what I'm trying to pitch here.
I think we are good, Shubham, in the room.
Thank you so much. Thank you so much for confirming. All right. So next, so once we have accepted the engagement, once we have followed the series SA 200 to 299, then we come to the series 300 to 499, wherein we will perform risk assessment procedures. We will be understanding the entity and its environment, performing analytical procedures to assess the risk, going to the level of an account balance and discuss, identify what are the risks involved to that accounting balance. So we can segregate the risk assessment process in these three parts, although they are all interrelated. So the first is regarding understanding the entity and its environment. Now, while we are understanding the entity and its environment, we first of all need to focus on the nature of the entity, nature of the business per se, what business they are actually doing. Because once we are able to understand the business, then only we will be able to identify particular risk, whatever is there. Then we will have to see, whether the digital assets are held by the entity or by a custodian, because each item will bring different kind of risk. So we will have to understand whether the digital assets are being held by the entity or by a third party. We will have to understand the digital asset transaction. For example, Nike right now is selling their virtual sneakers on a platform. Similarly, Bitcoin they are selling on a platform. Ripple, for that matter, they are trying to sell a process, right, to make payments very frequent, very easy, streamlining the whole payment process. So everybody is having a different product, although they all seem to be on a blockchain. We need to understand what is our digital asset underlying, what is the objective of the business, so that we are able to identify the specific risk and perform specific procedures. We will have to understand the industry that the client is in, the geography they are in, what is the regulatory environment there, what is the external factors that we need to consider while we are performing the audit. For example, in India, income tax is applicable. In other country may or may not be. So we will have to assess it from that perspective as well, right? While we are auditing an entity in India, we will have to keep in mind that we are keeping income tax considerations handy. But wherein income tax considerations are not there, but expected to be passed. For example, a bill is already proposed. We may have to, take views of management, what they feel, and also understand the risk associated. Sometimes the income tax considerations may not be that clear, so we may have to go to a legal expert and ask for their advice. Then again, financing, how they are getting funded, whether it is a privately held company, whether it is a publicly held company. This will change our stakeholders, change our risk altogether. So we need to understand whether they are doing business using debt money, or how they are getting funded. That is very important to understand. We need to understand the financial reporting considerations, in which geography they are working. Is there any guidance issued by any professional standards, or if there is any legal financial reporting standards that are available. All of this we have to keep in mind. Now, how we will be able to do all of this? We will be able to do it through understanding the policies and procedures that the company is having. We will have to go through all the documents that they are able to provide. We will have to assess whether the management has considered a change in management scenario, right? Because these are startups, and the skill set is in high demand. There is a possibility that I have seen practically that in startups, a lot of time it happens that higher management people, for example, CFO, they might get changed. Few examples. An example could be Bharat Pay, right? We have seen Ashnil Grover to leaving the company, and we have seen many other such situations. So we will have to assess the risk, whether management has considered such a scenario and how they'll be able to deal with it. We will have to assess, whether management has a robust system of identifying risk. We might also have to discuss it with TCWG, those charged with governance, and understand what is their view on it, whether management has a robust risk assessment procedure or not. We have also listed out some of the processes which we might have to focus while we are performing the risk assessment, while we are reviewing the process. Although we will be doing all the whole lot of other processes, but these can be some of the processes related to digital assets that we should keep in mind. How management is safeguarding their digital asset, particularly how they are safeguarding the data that is on the blockchain from hackers, and how they are preventing a risk of losing the private key. Then how they are monitoring transactions, what is their process of valuation, how they are getting the relevant data for valuation, where are the inputs coming from, whether the digital assets are held by a third party or on behalf of others. So these would be the major accounting processes, entity processes that we need to keep in mind while we are performing a risk assessment or auditing an entity. Now, next question comes, as we had discussed in the starting as well, blockchain comes with a lot of challenges. And then there is an advantage also, right? We have heard a lot about blockchain, right? That it is such a phenomenal concept that all the data is at a single stage. We don't even have to verify it. The verification is getting automatic, right? All of the other things that we have heard. Now we have to think from a perspective how we can use blockchain as an audit evidence. Because when we are in an audit and the entity has their assets on a blockchain or has their data on a blockchain, it might come as an advantage also, and sometimes it becomes a necessity to test the data from blockchain itself. Now, let me just try to explain how it works physically, or I should say virtually, in fact. So how this actually works is, there is a cloud, or there is a blockchain per se. All the data is there, and there are public addresses there. Public addresses denote the person holding that particular digital asset. Now, what we can do as an auditor is think from a perspective that what if we can enter that blockchain, and what we can do is we can extract all the data from there, and then we can cross-check from the entity's records. Wouldn't that make audit very interesting also, and audit very easier also? Now, something like this can be possible through blockchain explorers. a lot of third-party blockchain explorers are available today. What an auditor can do, they can utilize that third-party explorer to extract the data. The third-party explorer will extract the data and put it in a presentable format. You will be able to see the public addresses there, and with the public addresses, you will be able to identify whether the who is the owner of that particular digital asset. At least you will be able to match if your management says that this is my this is my public address, you will be at least able to match your public address with that data. Now we have to keep certain things in mind while we are utilizing a third-party explorer, or I should say we need to perform some procedures. The first would be, since there are multiple third-party explorers available, we should utilize more than two third-party explorers and perform same procedure. We should extract the data and then compare whether all the third-party explorers are throwing this right result, the same result. A lot of time it might happen because see, this is a black box. You are just extracting some information from that black box. It's very important that the information that we are deriving, we should be comfortable about it. And the only way would be to have multiple blockchain explorers and compare it. Then we can also compare that data with the management's bank statements, contracts, other documents that the management provides, so that we have a comfort that whatever data we have extracted is also matching with the client's data. We have to keep in mind that the multiple blockchain explorers that we are using, they are not from the same parent company or from a related party, because again, if that is the case, the name could be different, but the output can also be same. So we have to ensure that they are not from the same parent company with different features. We need to ensure that the blockchain explorer that we are using is from a trusted source. Should be a branded company or a company which follows some standards, quality standards. So that we have to keep in mind. Now, although we will be able to cross-check all the data from a blockchain, hypothetically, we will be able to do that, right? And we have taken a comfort, right? All of this information we have cross-checked. Whatever my client said is on the blockchain as well. Still, there are certain challenges. The first is having a data on a blockchain does not mean that they are authorized transactions. So again, the authorization we'll have to test. Still, even if the data is on a blockchain, there can be a chance that the transactions are fraudulent or illegal. There can be a side agreement also, but management has not given to us. And there is a possibility that there is a human error. Human error could be from a technological aspect, right? The software is not working fine, the testing was not done appropriately, or it can also be in a way that a person, while executing a transaction on a system, they missed it, or by mistake it was entered with a different public address. All of that, all those considerations we have to keep in mind, because each blockchain is different, differently drafted. There is a whole lot of coding behind it, so we have to keep in mind whether the system is working properly or not, right? If we have a sufficient system in bitcoins, that does not mean that our accounting system is also that sufficient. So auditor will have trouble verifying who is the actual owner. There is a chance that there is a public address, but we don't know whether the public address is actually owned by this person or not. We may have to go through some documents when the wallet was created, when the public address was issued, but this will come with a whole set of new challenges. We will have to see, we will not be able to see who the other parties are, who is the counterparty. It can be a terrorist organization. I mean, I know I may sound loud, but that is a possibility. Everything is possible these days. The way we are seeing these products, these things happening, anything is possible. So we have to think beyond what we could think earlier. Anything can happen these days. And we should not simply assume that the blockchain protocols are effective. We have to test the protocols there. We have to, we have to test the controls, how the information was recorded and whether it was recorded properly. But if we are able to address these concerns, again, blockchain can come out as a very good audit evidence, very trustworthy, because it has time stamping, time stamping. It is very fast. It's very cost effective. You just need to deploy a tool, and the tool is doing a lot of work, which earlier we used to have a junior member do. So we might have to, ask somebody to tick and tie every information. If it is on a blockchain, if we are able to verify it through a tool, that really saves us time. The transactions that are recorded are permanent. If we are able to test the protocols, we can be satisfied that the data may not be tampered. So these can be some advantages when we are utilizing blockchain as an audit evidence. So we will discuss about how we can verify what could be the challenges in existence, completeness, valuation, measurement. So measurement we have already discussed a lot, right? We have discussed, what would be the accounting issues. So again, accounting issues will remain same. Auditing issues will remain same. Whether the entity is recording the profit appropriately, whether the assets are recorded appropriately. A few things that I can highlight here would be, I'm not sure if you guys have heard about commingled wallets. So there is a possibility that there is an exchange or a third party maintaining all the digital assets, and what they're doing is they are having only a single public address, and they're keeping information of all their customers in that particular wallet or in that particular public address. Now, what would happen is there's a possibility that in fact, what is a possibility? In fact, it is. I'm pretty sure that what will happen is when you are extracting data from that particular public exchange, public blockchain, the number of digital assets owned by that particular public address will be much higher than what is appearing in our books. So it will pose a challenge how to verify that. Again, the other point would be suppose there is a loss of digital asset key. How we'll be able to verify whether management has at the year end has the digital key, whether they are able to transfer it. Again, talking about that commingled wallets, there is a possibility that what the third party organization is doing. Suppose one customer says, "I want to sell one Bitcoin," and the other says, "I want to purchase one Bitcoin." They are not even entering any data in the blockchain itself. What they are doing is they are only updating their own records. So again, it will pose a challenge how to verify that whether that transaction happened or not. So all of these challenges are there. We will have to perform confirmations. We will have to make inquiries from management. We will have to see whether as a subsequent event it was converted into currency, those assets that we are looking at. We will have to we will have to test the controls that are there to ensure the security of private key. What are the IT application controls, whether they are operating effectively. All those considerations would be there. Then rights and obligation, again, as I was talking about, the digital transactions are anonymous. We can lose the private key. For that, what we can do is at the end of the year, or at the way we do physical verification, what we can do is at the end of the year, we can ask management to transfer the cryptocurrencies that they hold or a digital asset that they hold from one public address to one controlled public address to another controlled public address, which is owned by them itself. So this way we'll be able to at least ensure that they have the ability to sell those assets on a blockchain, and we'll be able to see whether they on the date of balance sheet at least whether they had digital the private key or not. We will have to review all the third-party agreements, confirmations. We will have to review board minutes. We might also have to take legal opinion. What if the exchange loses control of private key? Whether there will be a contingent obligation on the management. All of those we will have to take into consideration. Then completeness, again, it is very difficult. Sometimes there can be a delay in the processing of transaction on a blockchain as well, because when there is high market volatility, the management may also stop the data transfer for a few minutes or a few days, right? Then there is a possibility that there are different exchange technology being used So it becomes very challenging to ensure completeness on all the exchanges that are there. There can be, there can be a slowdown of the system because of the volume that is there. So all of those considerations are there, and we will have to perform reconciliations of blockchain to our accounting records. We will have to see whether the data that is there is pre-numbered or not, whether we can verify it from a source document or not. Again, valuation we have discussed in a lot detail. We have to do fair value. We will have to focus if there are external specialists involved. We will have to focus what are the inputs that they have considered, whether they have considered the volatility in the market, how management has concluded what is their primary market. This can be a big challenge, right? Management may try to identify a market which is most advantageous to them. So we will have to be very skeptic when we are looking at all these things. Now, what are the other audit considerations? There are related parties involved. There is a possibility that there is a group of entities, suppose entity A, entity B, entity C. Now, when I'm auditing entity A, the entity A says that I have $100,000 worth of digital assets. Entity B also says the same, entity C also says the same. And all these entities, I'm not a common auditor for them. So to each of the entity is telling their auditor that this is the private keys that we have, this is the public key we have, go and check yourself. We have the legal ownership. We can also transfer it, right? Because we have the private key as well. But there is a possibility that all three entities are showing same asset as their assets because they are related party. They are part of the same group. There can be this challenge. There can be a challenge that the digital assets are not owned by themselves. There's a challenge that the management is not disclosing all the related parties that are there because we cannot verify that, right? Whenever there are many transactions happening, what we see is public addresses. We don't know whether it is entity A, B, C, or D. So it will become a big challenge, and we will have to think through how management is dealing with it and how, as an auditor, we can deal with it. Presentation disclosure, we have talked about it in detail. There are presentation disclosure challenges. There is no applicable reporting framework that we have. It might become very difficult to understand whether we are the owners of the digital asset or we have a right to receive cash through that digital asset. Sometimes it can be a possibility that the third party, which is holding the asset on our behalf, is actually showing it on their balance sheet, and we do not show it on our balance sheet. We only show a right to receive the asset, depending on the terms of the agreement. All of that has to be kept in mind from a business angle, and how it should be presented. What disclosures are needed, right? If there is a significant activity happening, should we disclose that? That we need to consider. Then subsequent events post signing of our balance, post the end of the year, but till the time we are signing the balance sheet, we need to see whether there is any unusual or significant buy or sale, any transfers of digital assets that has happened with the entity, whether they have lost the private key post the year end. We will have to see whether there is a hacking attack on them, any other considerations, right? We will have to see whether there is any subsequent event that has happened, and it can have an impact on the balance sheet as well. So we will have to assess whether there is an impact on the balance sheet, or we have to assess whether we need to disclose it. So all of that has to be there. We have to see laws and regulations. We'll have to understand the regulatory framework in which the entity operates and whether they are complying with it. We will have to, this will help us in identifying the risk of material misstatement of the financial statements and non-compliance with laws and regulations. We will have to evaluate whether the entity's digital asset activities may be subject to jurisdiction of the regulator. For example, in India, there was a time when there was a speculation that it is banned. So we have to keep ourselves updated through all these rules and regulations, litigation and claims, and think from that perspective whether it is significant for us. Then there are income tax considerations. We would have to see, whether TDS provisions are applicable, whether what would the difference between the company accounts and tax accounts, whether a particular expense related to these digital assets will be allowed or not. from a deferred tax perspective, all other aspects that are there, we will have to understand for each geography. Management representations. Now, since there is so much complexity around, this is the one of the tools that we can use as an auditor. We will have to obtain management representations regarding whether they have provided us all the relevant information, they have given us access to all the side agreements, all the agreements, and hell lot of other things. We will have to ask from management for representation on many other things, and the auditor will have to spend a lot of time while drafting their MRL, right? Because it will help us in mitigating that risk that we are having while we are auditing the entity. Now, conclusion, while we are concluding the audit, we'll have to go through all the scope limitations that we saw. For example, if we were not able to verify the data from blockchain, this is a scope limitation. If we were not able to test some inputs, if we were not able to conclude on the primary market that they've utilized, all these are scope limitations, and we'll have to consider while we are coming to our audit conclusion whether we have scope limitations, and we will have to accordingly modify our opinion. We will have to assess whether we need to modify or not, and whether a clear opinion is fine. We will have to assess the key audit matters. We will have to disclose them in our audit report. For example, the valuation of these digital assets, testing the existence. It could be, right? We will have to assess whether it is significant, whether it can be a key audit matter. From asset 715's perspective, we'll have to see, right? We'll have to assess whether the going concern as well, because these are all startups. They are based on fundings at a very initial stage. They are at I should say at an emergent stage, right? So it's very important to go through going concern assessments as well and see there is any indication or any challenge through that. Then we will form our opinion. We'll have to see whether there is an information on which we want to put emphasis, or there is some information that we want to put as another matter paragraph. So this becomes very difficult while we are very important while we are drafting our audit report. And then again, we will have to see. So these are all startups at a very emergent stage. They may be making claims in their reports, what they are issuing. So we'll have to see what all other information is annexed to the audit report that we have signed. And we'll have to see, what are the considerations, and keep an eye on it. Has to have a very close watch what we are signing and what is the information related that the management is presenting as an annual report. Now, let me just summarize what we have learned so far. So what we have learned is that we have to assess our capabilities while we are accepting an audit, our independence policy, whether we are able to present ourselves as an independent entity, or if we are independent in mind. Then we will have to assess management skills, competence, their integrity is very important. We talked about the example of that stable coin. We will have to understand the process and controls. Once we have accepted it, there are certain processes that we have to focus on. There are certain key considerations, some technological challenges that we may face. We may have to obtain a SOC report for a service organization that is involved, right? SOC type 2 report, right, which is more detailed. Then at the end, I can summarize saying that the fundamental considerations to audit digital asset remain the same. It is our responsibility to gather the evidence, test the management's assertion, right, to ensure fair presentation of financial statement. That is our objective. But we have to do all these steps in a drastically different manner because of the technological change that is there. And we will have to keep ourselves updated. We will have to keep ourselves as a group. We will have to make sure that we are putting enough efforts, doing enough research, sharing our knowledge in such forums, so that as a profession we are able to tackle the challenges that are there and reap benefits out of it, and come up as an expert auditor in digital assets. And there is also a scope of technological advancements. For example, the third-party explorer that I was talking about, a lot of us can enter into such space and explore from a technology aspect what solutions we can provide to our audit firms as well. With that, maybe we can take up some questions, or I would request Asha if you would like to add something.
Shubham, sorry, I was just sitting on the other side of the corner, took them to walk. No, this is, I think, great, Shubham. I don't have any other thoughts, but I think if I kind of heard you well, more from an audit perspective and summarize whatever you said, it seems to be a lot of risk, of course, in these entities, right? So we have a risk from the identification of the client background to whether it would be prudent to take up the audit and what kind of assertions and how we test those assertions in an environment which is so dynamic, technical, right? And driven by a lot of passcodes, private keys, and things which sometimes may not even have an access. I think that's kind of what you touched upon, which is great. One thing which that came to my mind is a management representation letter. The only way I think we always covered our risk, of course, it's a second line of defense, is to have a robust letter of representations, right? So I think that's another area. Of course, everyone has to look at how they draft it and to what extent they can rely on the representations made by management, whether it's related parties, whether it is corroborative evidence, right? Whether it's completeness of certain assertions. I think that becomes challenging, as you were mentioning. I think largely in a standards and auditing framework, when I look at just summarizing 200 series, is all about being very prudent on acceptance formalities. 300 series, I see it to be fairly okay, but planning in terms of what procedure we need to plan, even if you want to plan, let's say, controls, we want to do compliance procedure or test of controls in a startup environment where they're just kind of hurrying up to do business transactions. They may not invest so much time in the robust controls. They may have a lot of technology in place, but they may not have a robust internal controls. That's another thing we should look at it. So how much we can do substantive procedure. When I go to SA 315, it says substantive procedure alone cannot provide sufficient appropriate audit evidence. Now said that, how do we embed a test of controls in an organization which is just running in its pace, right? It is just trying to catch up the business and not really thinking about making the house in order from an audit perspective. That's, I think, one of the area from a 300 series point of view one should look at in risk assessment when we do. Hugely, I feel it is a business risk that we also have to be very conscious about. We always look at risk assessment procedure more from an audit risk perspective. Of course, business risk is an element that we consider, but this is one such entities where business risk plays the vital role, because we never know what would change from a business point of view. A flavor of that risk-based audit methodology is very important for us. Materiality-driven audit may or may not suit us in all the scenarios, because all transactions will have an equal value. How do we determine what is materiality? In my mind, a qualitative materiality of the risks associated with the business is what one should consider. That's kind of 300 series. When I go to 500 series, collection of evidence, we always think about sources of evidence, right? And sources of evidence is external, internal. We have documentary, visual, oral. I think none of this is seeming to be applicable here. It's kind of it's virtual, right? It is not even visual. It is all virtual. So we might have to start looking at evidence in a very different way in the era of entities which run on this blockchain technology. When I go to 600 series, I would see experts. When I say I need evaluation from an expert, how much I can rely on that expert, because this probably may not be best judgment assumption that an expert can apply to come with evaluation. It will always be an hypothetical assumptions, because may or may not have a use cases to develop those kind of expert opinions. So I would see 600 series from an expert perspective, we should be very careful. And internal audit may not be too big unless until they are of a size like Coinbase, then yes, internal audit might be applicable, but 600 is from that perspective, and 700 is, of course, is the most important flavor. These are all startups. They are all, I mean, if I have to say, maybe less than 30 years age group would be probably CFOs and CEOs, and the pace at which they run, right? They may not have patience to accept your modification of opinion, emphasis of matter. They'll always push back the auditor that I would want a clean sheet report without even spending time. So there would always be those conversations which are difficult with clients. Reporting becomes very tricky. So you summarized all of it very well, Shubham. I think that's what few of the takeaways, I think, because many of them cannot speak. I just summarized all the takeaways. I hope that makes sense.
Sure, Asha. Thank you so much for summarizing it. This was really helpful. Do we have any questions? I don't think I can see any.
I think we have 3 questions from Suma. That was, I think, more on, I think not even accounting, it is concepts around it. I'm not sure if I can answer everything, but I might or might not be correct. But the first question on blockchain and Bitcoin is confusing. The way I understand is the blockchain is a technology, ideally. That's a very large term. Everybody uses blockchain technology, which is a distributed ledger system, whether it is Solana network or whether it is Ethereum network, I think whether it is Binance network, it's all based on the technology, which is like a blockchain technology. In my mind, these are 2 different words. Binance is made on a blockchain technology, but it is not a blockchain by itself. Anybody can use the technology. It is need not definitely be crypto entities. It can also be a non-crypto entities who can use blockchain as a technology for their solutions. So that's kind of the difference. I see a second question she has is, let's say, is Mana a cryptocurrency? Yes, since it's connected to Decentraland. Can diminution accounting under Ind AS 38 be influenced by this asset banking? So I think we'll have to look at NFTs slightly differently. I don't really know much about Mana. I haven't invested much. I'll not talk about this currency, but if it is a Decentraland, the question is still intangible asset because it's a Decentraland which is virtual. So it will still fall under intangible and of course driven by the principles of Ind AS 38, I would say. So that's the perfect analogy. Can't the concept of bonus shares be applied to airdrops? I think that's slightly difficult to kind of talk about it. The bonus shares, because we're saying shares itself, the concept of the bonus shares cannot be applied in the crypto world. Like airdrops cannot be treated as bonus shares because it doesn't come into 1:1 or any proportion. It is very differently being treated. So it should be looked differently. I don't think so. We can map a concept of bonus shares to airdrops per se. But when the airdrop happens, because it happens at a free of cost or very nominal value, the person who is receiving the airdrop, one has to look at how do they account for it? What should be the actual accounting of that airdrop received? That is what one should look at it. But I don't see a relationship of bonus shares. But this can be debated more. I think these are 3 questions I would say largely. I'm not sure if I missed any other questions. Right? Okay. All right. This is all we have, Shubham. If you're good, I think we're on time. Chairman sir is waiting. We're good to close. Yeah.
No, madam. You can still continue. I don't have any issue.
Yeah, sir, we don't know what is happening outside. I am just worried about it. Home.
Today is not raining, luckily.
It's not raining. We had an orange alert today, I think. Yeah.
Acha. Thanks a lot for an excellent session. I know what is the pain you have taken to present this paper. Lot of background work has been done from your end. Really appreciate your contribution for the members, enriching their knowledge. I thank on behalf of Bangalore branch of ICA for sharing your valuable knowledge to our members. I request our committee member Rejo to present a memento to Asha madam.
Okay, I'm confused whether to sit or stand. I guess.
I thank Shubham Bindal sir also. Thank you sir for your time and efforts sharing your knowledge to our members. We wish to see you as a speaker in our Bangalore branch physically sometime. Thank you.
Thank you so much, sir. Thank you for having me.
I thank all the members, those who actively participated and made this program successful. Thank you all once again. Bye.
Thank you, sir.